From the bank, Ms Shana Cunningham, Director of Enforcement and Anti-Money Laundering, Ms Mary Elizabeth McMunn, Director of Credit Institution Supervision, and Mr Gerry Cross, Director of Financial Regulation, Policy and Risk. And just a note on privilege, first of all, I wish to advise the witnesses that by virtue of Section 17(2)(I) of the Defamation Act 2009, witnesses are protected by absolute privilege in respect of their evidence to this committee. If you are directed by the committee to cease giving evidence in relation to a particular matter and you continue to so do, you are entitled thereafter only to qualified privilege in respect of your evidence, and you are directed that only evidence connected with the subject matter of these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that where possible you should not criticise nor make charges against any person or persons or entity by name or in any such a way as to make him, her or it identifiable. Members are reminded of the long-standing parliamentary practice to the effect that members should not comment on, criticise or make charges against a person outside the Houses or an official either by name or in such a way as to make them identifiable. I now invite yourselves and Mr Cross, I think, leading to make your opening presentation. Go ahead.
Mr Chairman, honourable members of the committee, thank you for inviting us here today to discuss. Thank you for inviting us here today to discuss the future framework for accountability in the financial services sector. As this is an issue inextricably linked to various aspects of the central bank's responsibilities, I'm joined here today by Shana Cunningham, Director of Enforcement, and Mary Elizabeth McMunn, Director of Credit Institutions. Ineffective governance, low standards, and poor corporate culture are widely accepted as a root cause of a number of significant failings within the financial industry in recent years. These failings have had severe consequences for customers and shareholders, and also, in the case of the financial crisis, for the stability of the financial system as a whole. It is important that standards are driven up. Global and national experience indicates that in order for a regulatory framework to work well, it needs to drive strong and effective governance within firms. To achieve this, the allocation of responsibilities within firms needs to be clear and comprehensive. Individuals need to know what they are responsible for, to be clear what standards are expected of them, and to recognise that if their actions fall short, they will be held accountable. Failings in the Irish banking sector have been well documented, and there is a deficit of trust as a result. One component necessary to restore trust in the banking system is ensuring that firms are well run and organised, with clarity regarding individual responsibilities and expected standards, and accountability when decisions are poorly made or poorly implemented. The mission of the central bank is to serve the public interest by safeguarding monetary and financial stability, and by working to ensure that the financial system operates in the best interests of consumers and the wider economy. We have accordingly put forward a proposal for a new framework of conduct standards and senior level accountability. We believe the proposed changes will be an important step in delivering better outcomes for consumers, ensuring that firms are well run, and improving confidence in the financial sector. And that is why, in our response to the Law Reform Commission's issues paper on regulatory enforcement and corporate offences in January 2018, we recommended a number of changes to the existing framework. We indicated that we supported reforms such as legislating for an offence of egregious recklessness, assigning responsibility to senior personnel, enhancing individual accountability, and introducing conduct standards that would set clear expectations as to behaviour and conduct in the financial sector. And we built on those proposals in our July 2018 report to the Minister for Finance on the behaviour and culture of the Irish retail banks. We recommended the introduction of an enhanced individual accountability framework, key components of which would apply to all regulated financial services providers. And these proposals are in line with recent recommendations of the Financial Stability Board, that national authorities should identify and assign key responsibilities, hold individuals accountable, and assess the suitability of individuals assigned key responsibilities, including their responsibility for following conduct standards. They have much in common with frameworks introduced in recent years in other jurisdictions, such as the UK and Australia, which place obligations on firms and senior individuals within them to set out clearly where responsibility and decision-making lies for their business and to adhere to certain conduct standards. It is important to mention that individual accountability is not a new area of focus for the central bank. We already have a range of strong powers, and we use them, both to keep unfit individuals out of the financial services industry and to pursue wrongdoing where it occurs. The fitness and probity regime was introduced in 2011. The key objective of that regime is to ensure that individuals who hold certain positions in regulated firms are committed to high standards of competence, integrity, and honesty. For the most senior roles in the industry, the central bank acts as a gatekeeper and must approve proposed appointments. This regime has been instrumental in the central bank's work to ensure that the right people occupy senior management roles in the financial services sector. We have also conducted investigations in respect of existing role holders where suspicions have arisen. We have also taken action against individuals under the Administrative Sanctions Procedure, the ASP, and when carrying out enforcement investigations, we consider all possible angles, including individual accountability. Since 2006, sanctions have been imposed under the ASP against individuals, which have included monetary penalties and lengthy disqualifications from being a person concerned in the management of a regulated firm. In short, our system of assertive supervision is underpinned by robust enforcement. However, enforcement actions against individuals can be challenging and complex. Management in regulated entities may seek to insulate themselves or be at a remove from apparent misconduct. Senior individuals can seek to escape liability for wrongdoing by hiding behind the collective. This experience is directly relevant to our proposals for an individual accountability framework. And turning now briefly to the key elements of our proposals. First, we have proposed enforceable conduct standards setting out the behaviour expected of regulated firms and individuals working within them, including relatively straightforward obligations to conduct themselves with honesty and integrity, to act with due skill, care and diligence, and in the interest of consumers, and to cooperate with regulatory authorities. It is proposed that additional conduct standards would be imposed on those individuals in senior roles, including the requirement to take all reasonable steps to ensure that the area of the business for which they are responsible is controlled effectively and complies with any regulatory requirements. And there will also be principles for businesses applicable to all regulated firms. Where firms or individuals fall below these basic standards, the central bank may decide to take regulatory action and impose sanctions where necessary. They will also provide a sense of shared values and empower individuals at all levels in the organisation to speak up and challenge issues that arise in their firms. And we believe that these are standards of behaviour that well-run firms already expect of their staff. Second, we have proposed a senior executive accountability regime. This will require firms to set out clearly where responsibility and decision-making lie. It will foster better governance by identifying a set of senior executive functions with clear responsibilities for which statements of responsibility will be in place and supported by responsibility maps within each relevant organisation. Taking a risk-based approach, it is proposed that the initial introduction of a senior executive accountability regime would focus on a subset of the financial services industry, including credit institutions, certain insurance undertakings and investment firms. Over time, it will be rolled out more widely. This phased approach will help ensure efficiency, effectiveness and proportionality. Thirdly, we propose a new simplified, unified enforcement process. The current hurdle of participation should be removed, such that the central bank could hold individuals to account directly for their misconduct under the Administrative Sanctions Procedure, rather than only where they are proven to have participated in a firm's breach of rules. Removal of this participation requirement is essential to enhancing the accountability of individuals for failing to maintain basic standards of conduct. Finally, the fitness and probity framework would be enhanced to include a requirement for firms to certify the ongoing fitness and probity of individuals in key roles. So in conclusion, the proposals we have set out will clarify the lines of responsibility within relevant firms, build on our existing powers, and enhance our ability to hold senior and other individuals in such firms to account. This will, over time, result in improved governance across the financial sector. Following the financial crisis, the central bank has adopted a more intrusive approach to supervision, combined with a credible threat of enforcement. The legal and regulatory framework has been greatly enhanced. However, as events show, there is more to be done, in particular in the areas of conduct, culture and individual accountability. We therefore welcome the Minister for Finance's indication that he will bring forward draft legislation on these proposals for Oireachtas consideration. My colleagues and I very much look forward to hearing the views of members of the committee and to answering your questions. Thank you.
Thank you very much, Mr. Cross. Deputy Burton, go ahead.
Thank you. I'd like to ask you a general question at the moment, and that is in the context of banking culture and the reform of banking culture. I'm sure you're probably aware that there's quite a crisis of drugs in our society at the moment, and that generates enormous profits which find their way into the banking system. Now, what I would like to ask you is, how do you address the issue of money laundering in Ireland? The bank was being blamed by the general banks last year and the year before for the huge amount of inquiries going to elderly people in nursing homes as to the security and genuineness of their identity. And in fact, the central bank, I took this up with a number of people in the central bank who said that wasn't the central bank view at all. However, there is a massive problem with money laundering, and somehow or other that money is going into our banking system, and I would say it's one of the greatest threats socially. And as we're dealing with cultural issues, what I want to know is, do you, for instance, work with CAB in terms of money laundering and to spot it and identify, for instance, if small businesses or certain kinds of businesses, cash-type businesses where there's a lot of cash generated, are being used for money laundering? And specifically in relation to casinos, which are now all over Dublin and Ireland in an unregulated way, even though most local councils have voted against them. And again, they are heavy cash generating machines. Now, in other jurisdictions, this is what people involved in banking culture actually go after, because if we're generating large amounts of illicit cash through the massive drugs industry in our society and the guns industry in our society, I would like to know what, if anything, the central bank is doing to identify the areas where the problems are. I can give you several other examples of where large amounts of money are being generated to the very destructive effect in Irish society. And I understand you're now passporting bank executives and so on, but that's not working in terms of how the flow of money in this major illicit area of activity is proceeding. And I started with my first question was, do you work with the CAB? Do you have CAB people in the central bank who are sharing their knowledge with you? Do you see deposits in certain institutions where you may have, do you know the profiles of who the depositors, as it were, are in terms of the risks of illicit flows of cash from illegal trades? I mean, obviously, there are a number of other trades which are highly illegal and which, by reputation, generate large amounts of cash.
I might start in the context of do we work with CAB. I think it's in the context of the framework, the Central Bank is part of the Anti-Money Laundering Steering Committee, which is chaired by the Department of Finance, and the constituent members of that committee would include CAB and would include An Garda Síochána, the Department of Justice, ourselves and indeed others. And we all do play a role in the context of the AML-CFT framework in Ireland. Specifically in relation to the Central Bank, our role is in relation to the supervision of credit and financial institutions' compliance with AML requirements. So in that context, that is about them knowing who their customers are, understanding their customer profiles, monitoring the way that accounts are used. But most fundamentally, it's about making reports of suspicions to An Garda Síochána and the Revenue Commissioners when they arise. So it is An Garda Síochána and the Revenue Commissioners then who investigate suspicions of money laundering or terrorist financing. I suppose in that context, perhaps it's helpful just to be aware in terms of our supervision that we do so on a risk basis, that we have a high degree of engagement with the banking sector in relation to their AML-CFT compliance, and that we do work very closely with An Garda Síochána, who would also work very closely with the banks in the context of making sure that the banks report suspicions to An Garda Síochána to allow for effective investigation of concerns in respect of money laundering.
And could you tell us how much of that reporting there is and what kind of areas it covers? Does it cover drugs? Does it cover, guns? You've mentioned terrorism there. I would also mention the illegal sex trade. There's a whole series of areas where there is a vast amount of money and it's global, but including in Ireland, a vast amount of money being generated, which has to find its way ultimately into some kind of banking structures. So what do you do, and how do you maybe train member banks or the banks supervised by yourselves as to how they deal with this?
I think maybe it's helpful just that the national risk assessment was conducted just in advance of the FATF review of Ireland in terms of Ireland's effectiveness in combating money laundering and terrorist financing, and that report was published, which sort of sets out on a sectoral basis, where are the threats in Ireland, where are the risks in Ireland, and how are those being mitigated. And I think that is a good starting place for where that's been set out. That was a joint effort again between the members of the Anti-Money Laundering Steering Committee and was published by the Department of Finance.
And what role did the Central Bank play in that?
The Central Bank would have played a role in that in the context of looking at the risks associated with the sectors that we supervise, and also, though, very much informed by An Garda Síochána in terms of where they see the risks. So that was Ireland's view at that point in time of the national risks in Ireland, informed also by a supranational risk assessment that's been carried out at a European level, because you're absolutely right. I mean, the money flows don't respect borders, so it is very much in an international context. I suppose maybe it is helpful as well just to reference the FATF review in Ireland that was carried out, I think it was just over 2 years ago, and the report that was published that identified in terms of the central bank's role and indeed the role of other supervisors of compliance that we had a rating of substantially effective. But there are issues that Ireland needs to follow up on, and they are being followed up on through the Anti-Money Laundering Steering
So could you
Committee.
tell us the issues that you have identified? Because it's one thing to talk about supervision and to talk about risk, but I think what the members of the committee would like to hear is examples of where you have put a stop to money laundering, drugs money, money from the sex trade, and so on, because I think that's something that has been raised in the Dáil and raised in committees on a number of occasions. And at the moment, certainly in Dublin, the level of drugs and drug dealing is just at historically high proportions. So I'm just wondering, the bank must see these and be aware of these money flows. What are you doing to actually stop these kind of illicit money flows, money laundering? That has to be a part of it.
So in terms of our role, what we've been very focused on is our supervision of the banking sector in the context of, are there AML CFT controls good and are they effective? And I think we had a heavy focus in that area. It has led to, we published a report on compliance in the banking sector where we set out the deficiencies we had seen. We expected standards to improve. There were a number of enforcement actions in relation to AML CFT compliance in the banks a number of years ago. And we have looked to the banks to improve their frameworks. Our engagement with the Gardaí would tell us that the Gardaí believe that has happened, because what this is about is making sure that suspicions are reported to An Garda Síochána in order to allow them to investigate. And An Garda Síochána would also be working closely with the banks in order to make sure that happens.
But we have, particularly in the IFSC, a huge range of banks which register regularly in Ireland and which come to Ireland, and we're very anxious to have that business. But we want that business to be legal, legitimate business. And what we do know is there are vast flows of money, both in Ireland, in the areas I've just described, but worldwide in similar areas and from right around the world, including from in relation to very poor countries where the money is just flowing out. So what I'd like to just know is, for instance, I asked you at the beginning, does anybody from CAB go into the central bank and look at your systems to see how good they are in terms of stopping money laundering?
No, that we don't have anyone in CAB working in the central bank.
Do you have anybody from the Garda Síochána? When I was Minister for Social Protection, where there was a significant problem with some areas of fraud, low but still significant in the sense of nearly 20 billion budget. So you were talking about 2-3% maybe. I had Gardaí come in and work in the department, be seconded to the department, to work in the department, and in fact, if you like, that interaction and learning from both cultures was extremely effective, and in fact was quite indicative of other issues that perhaps would have needed to be been addressed, which wouldn't have been directly concerned. I just want to know, just going to a committee with CAB from time to time, in terms just of the scale of illicit money around the world, just strikes me as being rather inadequate. I really welcome the commitments you're making here to culture, but I would actually like to see specifics.
I wouldn't like to leave with the impression that our work with An Garda Síochána and CAB rests with attending committee meetings. I personally meet An Garda Síochána regularly in relation to AML, as would many of the people who work in the anti-money laundering division. So it is a close collaboration, certainly not limited to a committee meeting on a periodic basis. And I suppose just to mention also, in terms of our international engagement, AML, you're absolutely right, is an international issue. We are part of the ESAs, where we look at AML in a European context. We are attendees of FADEF, together with colleagues from An Garda Síochána, the Department of Finance, Department of Justice. We're very much part of the international efforts to look to improve efforts to combat money laundering and terrorist financing. And I hope I've been able to give you a sense of how we're working with An Garda Síochána in Ireland to do that.
Yeah. My second question is a brief one. In the context of Brexit, obviously the threat of Brexit is now postponed for a period of time. We don't quite know for how long, but clearly we have issues in relation to the border. So we don't want to see a hard border returned. On the other hand, we don't want to see massive illicit trade being generated as consequences. So can you tell us, in terms of your contacts with the North and with institutions in Northern Ireland, what you have been doing in terms of setting in place a framework that will provide for the deterrence of smuggling, money laundering post-Brexit, but also ensure that institutions, and obviously this would be a case of cooperation with institutions in the North, that we do not have a massive zone along the border which becomes heavily dominated by smuggling. I mean, obviously we're hoping that, the best Brexit for Ireland is no Brexit. But nonetheless, it would look now, one way or another, that it is likely that the status of the relationship between the United Kingdom and the Republic of Ireland and the EU will change. So I'd just like to know what's the bank's involvement there, because I think that's one of the big issues coming down the line potentially.
Let me start off, and then my colleague Mary Elizabeth McMahon will say a little. Brexit, as you can imagine, like for this House, has been a very, very major component of our work, going back now 2.5, 3 years, well before the referendum even. It has been a multifaceted effort. So on the one hand, we had the significant inflow of authorisation applications across all of the sectors, which has been widely reported and which has meant that we have had to resource ourselves, organise ourselves and engage, I think, very effectively with that suite of applications. Secondly, there has been making sure that the firms for which we are responsible, the regulated firms, the very large number of regulated firms, are well prepared for Brexit in all of its many ramifications. So whether that be business that they do with the UK, business with Northern Ireland, exposures they may have, readiness for economic consequences, and that has been a very, very major aspect of our supervisory engagement over the recent time. Thirdly, there has been addressing the cliff effects that are potentially there. So what would happen if there was a no-deal Brexit? What would happen in terms of various pieces of legislation, various pieces of regulation? That has been particularly over the last 9 months, a year, a very, very major part of our work. And again, one which has gone, we would say, very well. We feel we are in a good position on that. And then fourthly, of course, right up until the middle of last week, a great focus on preparation for actually what would happen if there was a hard Brexit. Literally, how would markets react? What would the dynamics be? So that is all. So we are pleased that progress is continuing, or work is continuing to try and avoid a hard Brexit. One of the things I think we are very focused on is remaining very much at full readiness. I think that the situation in the UK remains a volatile one, hard to predict. We, in any event, only have a 6-month delay, things going according to that plan. So for us, it is very important that we and our firms and firms that are doing business in Ireland from outside, all of those firms remain ready, remain prepared, and have their contingency planning in place. I don't know, Mary-Elizabeth.
Yes, thanks, Gerry. Just maybe, Deputy, just to speak a little bit to what Shona was mentioning to you earlier in the context of the team that I have that are responsible for the prudential supervision of the banks. We would work very closely with Shauna's team in the context of anti-money laundering supervision. So the prudential supervisors work with the anti-money laundering supervisors in the context of, because the prudential supervisors would be very familiar with the institution's business models and what they're seeing, and if there's a change in terms of the business models of those particular entities. So I think that dialogue is a continuous one. We're an integrated supervisor, so information flows can go between both teams. Secondly, in the context of Brexit, as Gerry has mentioned, our focus has become increasingly acute as we've moved along in the context of the timeline over the last number of months. And what has that meant for us is that we're very clear in the context of any business that our institutions might have in Northern Ireland, for example, the number of credit unions that are along the border region, and also identifying where there might be vulnerabilities from a Brexit perspective in relation to those particular business lines. What we've also done over the last period is that we've had an enhanced level of reporting to us in the context of any flows that we're seeing in relation to those businesses, any difficulties that we might see in relation to things that are happening there. So as Gerry's mentioned, I think our focus as we got closer to the 29th of March and also to the 12th of April has increased over the last period.
Thank you very much, Deputy Burton. I'll bring you in now in a second, Deputy Quinnivan, but can I ask the committee to agree to Deputy Burke will take over for the Chair for the moment, because the Taoiseach is addressing the Shannon and I'd like to be there for that. Thank you very much. Deputy Quinnivan, go ahead.
Thanks very much. Thank the Central Bank for their presentation there. I have a number of questions on the proposals you're coming forward with, and I'll come back to you as well on Brexit later on. If your proposals were implemented in full today and the tracker scandal broke tomorrow, how would things be different? That's my first question. Second question I have for you there is, do any of your proposals or did you, in any engagement with the Department of Finance, seek jail sentences for breaches of these rules? Does the Central Bank believe multi-party action or class action suits have a role in empowering working people to take on the banks? Another question is there around the issue of bonus pay, and unfortunately it's back on the agenda. Is there any evidence that a bonus culture can lead to recklessness? How can this be managed, or can it be managed at all? Why does the Central Bank have faith in the banking industry's Irish Banking Culture Board to deliver change? Is the lesson of the past decade or so that bankers do not act in the best interest of wider society, and that where there is a group of them together in a room, this fact could be multiplied in its effect? So they're my basic questions. And the final question then on Brexit, we will come back, and you have answered some of it. But Brexit, as you know, as you alluded to, has resulted in a large number of firms and their employees setting up here operations, particularly here in Dublin. For example, Barclays Bank received approval from the British High Courts to move 190 billion of assets to Ireland. Bank of America, Merrill Lynch also transferred 50 billion worth of assets to this jurisdiction in recent months. This comes in addition to a swathe of other financial and legal firms moving their operations here as a result of Brexit. The IDA has said last year alone they secured 55 new investments as a result of Brexit, bringing 4,500 additional jobs to Ireland in major financial and legal firms such as Morgan Stanley, Bank of America, Merrill Lynch and DLA Piper. Some of these investments bring with them complex funds and asset portfolios to the value of hundreds of billions of euros. And my question then finally is, do you believe the Central Bank has enough resources to robustly monitor these new companies and their assets? Your Maga.
Thank you, Deputy. Let me start off. You've raised a number of related questions, but quite a number that first to answer. So maybe I'll start off and then I'll hand over to both my colleagues to pick up different aspects. Starting off with sort of how would things have been different? I think, as I said in my opening statement, what we are seeking to do here is, on the one hand, to respond to things we have seen in the past. Also to take account of international experience and forward-looking to drive up standards. So it is, I think, at the heart of our perspective that the importance of trust and confidence in the financial system is essential if it's to do its job. So what we have on the table here is a holistic, integrated set of proposals, the idea of which is to help and contribute to the driving up of those standards. In respect of any set of experiences in the past, it's always very difficult to say, would that precisely have been different? But we think that a set of proposals like this makes it less likely, will help reduce the incidence of events, whether they be prudential events, financial stability events, or conduct events in the sector. And they will do this in a number of ways. I mean, it is certainly the case, as we have seen in the culture report on the banks from last year, that behaviours, standards and culture within financial firms needs to keep being driven upwards. And to achieve, one of the things that we think is very important is to say clearly, these are the standards we expect. So I mean, it sounds very simple to say, people shall act honestly and with integrity. People shall act with diligence and due care.
Well, that's the concern we'd have.
But it's important not only to say it, but to say that everywhere, at every level within a financial firm, that is expected. Because not only, that's not just us saying, we will hold you to account, but that is part of it, but it's also allowing people within firms to hold each other to account and to say, I don't feel comfortable doing this. I don't want to do this. And here's a way that I can articulate I shouldn't be doing this. So we think that, so that will help. Secondly, I think it is, when you look generally, if you look back on the last 10, 12 years, and the range of different events, bad events that have happened, whether they be here or elsewhere, there is that issue of, well, who was responsible? And it's sort of, well, the bank was responsible, or somewhere in there things went wrong, but it's very hard to put your finger on it. What this is saying is, no, from now on, we will be clear. This is your area. If you haven't taken reasonable steps, you're accountable. You are responsible. So I can't say, it would have avoided this counterfactual or that counterfactual, but we can say we think it would make a significant contribution to improving things and really driving standards up as we go forward. Let me just mention your query on the Irish Culture Board. I think, as Derval Rowland has said earlier this week, and in response to the publication of the survey by the board, we think it is a helpful development. It's a valuable development, but it doesn't solve the problem. We think obviously culture is something, and improvement in standards is something that the industry itself needs to get a grip on, and this is one way for them to do that, and we are supportive of that. But it is part of the solution. It is a helpful aspect. We think that what we're putting on the table now is a very concrete, very sharp set of proposals which say, look, we have identified what we think is a gap, and actually that gap goes in and infiltrates the system in a number of different ways. Here's how we think we can improve things. So we think the Culture Board is helpful, but we need this answer. But Sean, I'm sure there's aspects you want to pick up.
Sure. I suppose just in the context then of our reflection on our experience. We were also very supportive of the work of the Law Reform Commission in the context of looking at regulatory powers and corporate offences and indeed the broader framework. And I suppose in that context, we set out these sort of high-level proposals initially and then put them forward as part of the Culture Report on the banking sector. And we do believe, I think this is about an enhancement of a framework. So I think if we reflect back on, there has been legislative change that has enhanced the powers of the Central Bank. We had the Central Bank Reform Act of 2010. We had the Central Bank Supervision and Enforcement Act of 2013, which have all been helpful in advancing the framework. But we think this is a very important proposal in the context of a further enhancement, because this is about looking at the conduct of an individual directly through the prism of a legal framework that would allow us to look at them directly. But because currently under our framework, under the administrative sanctions procedure, we need to look at firstly at whether a firm has breached a legal requirement and then whether an individual has participated. And we think this proposal would allow us to look at it in a very different way.
Just to, you mentioned in terms of bonuses and in terms of remuneration, you mentioned bonuses. I suppose maybe just in terms of the kind of overall context of what has happened post-crisis. I mean, pre-crisis, in the context of variable remuneration, in terms of bonuses, there were no rules about how that was awarded, what form it would take, and ultimately how it was paid. So I think it's important in the context of the European changes that have been made to remuneration requirements that all banks and larger investment firms are subject to. So there are now provisions in place which promote more longer-term incentivisation. And there are provisions in place, for example, where there can be clawback in relation to where variable remuneration is awarded. So the principles underlying those changes to those types of requirements is, I suppose, a much better balance between risk and reward, and ultimately trying to promote much more safe and sound and effective risk management within those institutions. So there's a contextual piece, I think, to what has happened at a European level, of which we have been part of and are supportive of in the context of moving from more short-term incentivisation to more longer-term incentivisation from that perspective. But I think we've said before, I suppose, we're keen to ensure that, I suppose, cultural change that's espoused in the banks is properly incentivised, and incentivisation is not just monetary in the context of what are the behaviours and cultures that are within institutions more generally. Specifically in terms of your Brexit question, so that's absolutely right. I think in the context of, while we've spoken around the contingency planning work that we've been doing and the cliff edge work that we've been focused on, another part to the Brexit situation is that we've had an unprecedented level of applications for companies that are looking to come here, far in excess of what we would see in kind of a normalised time. So that has absolutely meant that we've had to reprioritise, and we have had to assign our, in particular, experienced resources to the assessment of those applications. So that is not without some cost in the context of when you're doing that.
My question was, do you believe you have enough resources now?
And we've certainly sought additional resources in areas, and the institutions that you spoke about in terms of Barclays and Bank of America, they are supervised as significant institutions, and we are as part of the SSM, so the ECB, so we are part of that. We are part of the SSM, so they are supervised by teams that are jointly supervised between people that are actually on the ground in Dublin, but also colleagues that are in Frankfurt, because they're deemed, because of their size, they're deemed to be significant institutions. So we're not on our own, so to speak.
Burton? Sorry, if more?
Yeah, just one thing, sorry, just one question. I don't believe it's answered, and I did fire a few questions, so no problem with that. It's just about the multi-party actions or class action suits. Do you believe they have a role in empowering working people to take on the banks? So
I understand that is something the Law Reform Commission may have looked at quite some time ago, and certainly I think it's not something the central bank is necessarily advocating for, but I think in a much broader context, it's certainly worth looking at. And I believe the Law Reform Commission did so.
okay, thank you.
Yeah, I just wanted to ask you, you were referencing there, and you do in your statement as well, the banking collapse. And I think one of the things, or maybe you might disagree, but I think one of the things that led to the banking collapse was a culture in relation to very high levels of executive pay. Like if you think of companies like Lehman Brothers, they were paying themselves, you know, huge salaries. Now, in terms of the Culture Board, we have a campaign going at the moment to raise salary caps in relation in particular to those banks that were bailed out by the Irish taxpayer. And the salary cap at the moment is a pretty generous 600,000 by the standards of most ordinary people. I mean, if you take that, a lot of median salaries in Ireland are around the 50,000 mark. It's about 10 times more than the median salary in Ireland that would qualify for an individual to get some assistance with their mortgage. So what I would like to know is, what's your stance in relation to the current campaign by a number of financial institutions and individuals to have the salary cap removed? I know you were talking about moving to long-term incentivisation, but could you just explain, where does the Culture Board stand on the removal of salary caps when, in the context of most Irish people, 600,000 is a generous enough type of salary? And you're talking about the argument is made that you can't get the right people. Now, I just think that particular culture was one of the key factors in precipitating the crash, and that included Ireland, because some of the entities which crashed, they were paying their senior executives extraordinary amounts of money at the time. So have you a sense of where the central bank now stands in the context of a culture of corporate responsibility, ensuring no further crashes? Are you supporters of lifting the salary cap? Have you advised government not to do it or to do it? Or, you know, given that you're looking at financial probity, you're looking at reducing risk, and that I think it's acknowledged worldwide that excessive, you know, the whole masters of the universe syndrome of people like Lehman Brothers before the crash and the extraordinary salaries. Do you support raising and allowing bank bonuses to rise very significantly in Ireland?
So let me answer some of that, and then Mary Elizabeth will answer the other part. I think your focus on the issue of remuneration and pay in advance of the crisis is exactly right. I think that was a very big problem, the issue of pay before the crisis. Internationally, and at the European level, a lot has been done. And this isn't specifically what you're asking about, but it is important to set this context. A lot has been done. In particular, there's been a very significant focus on aligning the incentives that executives in banks and other financial firms, aligning the incentives they have with the risks that they allow their institutions to run. So whether it be clawback, long-term investment, malice, etc. A lot has been done on that page, and that has fundamentally changed the context. Secondly, in Europe specifically, there has been the introduction of a bonus cap. It was introduced as part of the capital requirements review post-crisis, alongside other important governance changes. We basically said that, in principle, no one should receive variable pay in excess of 100% of their fixed pay, and that can be raised subject to to vote of the shareholders. So that's the broad context where a lot has been done. Now, specifically in the Irish context, of course, we have the specific cap which you ask about, and Mary Elizabeth will say a little bit about that.
Yeah, and Gerry, maybe just to supplement the point Gerry made also in the context of the European changes, that when we talk about clawback, it's envisaged that it's in circumstances, for example, where a staff member has participated or was responsible for conduct that resulted in the significant losses for the institution or failed to meet the appropriate standards of fitness and probity. So it's quite specific in terms of circumstances where clawback can arise. I mean, to answer your question specifically in relation to the cap, in relation to the institutions that are subject to still subject to state ownership, I think this has been the subject of discussions previously at this committee by the Deputy Governor Sibley and also the Governor Lane. In the first instance, we've indicated that this is a matter for the Oireachtas, but Deputy Governor Sibley did indicate that we didn't see a case at this point in time in terms of changing the position in relation to the cap for senior executives. However, we did think that there was some merit in the context of looking at staff underneath that level, in the context of the restrictions that apply to a much larger set in terms of individuals that work within the banking sector. But that would need to be carefully looked at from that perspective. We have been asked for our views in relation to the review that is ongoing. We're considering our response in that regard. But as I said, I suppose I'm reiterating a position that's been articulated by Governor Lane and also Deputy Governor Sibley previously to this committee in that regard.
Okay, thank you.
Questions? I'm sorry I was late, but I was detained at another meeting. In relation to the task of changing that culture in the bank, who drives that? Who do you see as driving the culture change? One of the big issues is you can have all of the reform that you like on paper, but if there isn't someone to drive the reform or to drive, in your case, the change of culture, then it will go nowhere. How committed will the central bank be to that change that's needed? How committed do you feel the banks are to that change?
So thank you. So who drives the reform? So taking first of all the industry itself, that of course is driving up standards, changing the way the firms and the people within them behave, and changing their culture. That is something that was primarily be driven and made happen within the firms themselves. So you will recall from the culture report we did that we assessed that culture and we put the onus back on the banks, requiring them to make a range of changes. However, the role of the regulator is very, very important, and what we are putting on the table in this package is a set of proposals that we think will be very, very helpful and instrumental in helping drive that cultural change. For example, not only do we say very clearly we now need to know who is responsible for what within the firm, and you as the management of the firm must articulate who precisely is responsible for what. And that includes things like the implementation of this framework, responsibility for overseeing the compliance and conduct within the firm. So it specifically asks them to call out, so who within the firm is responsible for implementing this framework and for overseeing conduct, etc. And then, of course, it sets out standards of behaviour, general standards that apply throughout the firm, and specific standards for senior managers in terms of taking all reasonable steps to make sure that their areas are effectively controlled, that they don't cause regulatory breaches, etc., etc. So we think this framework is very much going to answer the question that you asked, Mr. Chairman, which is how do you make sure that someone is taking responsibility for these changes? I think you're also asking us about the central bank itself. The fact that there are three of us here today, and there could have been others as well, represents the fact that this is something that the whole of the bank is bought into. It is driven, if you like, from the governor down through the deputy governors and then throughout the organisation. So we have a very significant enforcement aspect to this. How do we hold people and firms to account? We have a policy aspect to this, which is what should the framework look like? What does a good framework look like? What lessons have we learned from overseas? We obviously have a sectoral aspect, so what's happening in the banking sector, what's happening in the insurance sector, and of course not represented here, but easily could have been, is consumer protection. Also have a very important role to this. So if you like, this is a commitment, the commitment to drive up standards within the financial service sector is a commitment across the bank. If you look at our 3-year strategy, this idea of the financial sector serving consumers and serving the economy and the role that we play in driving that to happen is at the heart of that. So I hope that answers your question. It's something we're very committed to.
What are the sanctions then that will be imposed should you find an individual not to have reached those standards, or the bank itself, through its policy or its approach, not having reached those standards?
So the way this proposal is framed is that we're looking to amend effectively the administrative sanctions regime that we currently have, under which we have a range of sanctions we can apply to individuals, a monetary sanction up to €1 million, a reprimand or indeed a disqualification. So it is about having a framework that allows us to take action directly against an individual, not necessarily through the conduct of the firm. And these are the sanctions that are then available to us as and when we investigate and find that breaches have been committed.
So how will I know that you have sanctioned the bank or an individual in the bank?
Well, we are entirely committed to transparency in the context of our enforcement actions. So where we have conducted an investigation, where we have deemed sanctions to be appropriate and the matter is then resolved, we publish a public statement on our website which sets out what the suspected contraventions were, what the conduct was, and what the sanction imposed by the central bank was.
And will you name them?
That is part of the process. For individuals, you'll have seen last year the central bank sanctioned 2 individuals formerly concerned in the management of INBS, and we published public statements naming them and outlining the sanctions imposed by the central bank.
And the normal difficulty here is that in dealing with a bank or an individual within the bank, they'll circle their wagons, they'll bring in their legal people, they'll stall you and obstruct you, because it's going to be hard to dig out that element of the culture. And do you feel that your hand as the central bank is strong enough to equally deal with that obstruction?
We have very much welcomed the legislative change that has happened in the last number of years. The Central Bank was given new powers under the Central Bank Supervision and Enforcement Act 2013 that were very helpful. We use them. In the context of the administrative sanctions procedure, certainly it is the case that entities and individuals are legally represented, as they should be, but we are committed to conducting investigations, and where we find suspected breaches, to taking matters through our administrative sanctions procedure. Where those matters don't resolve by way of settlement, which doesn't always happen, the Central Bank will hold an inquiry. The Central Bank is currently holding inquiries into 3 persons formerly concerned in the management of INBS and 2 persons formerly concerned in the management of Quinn Insurance. So we are very committed to using the powers we have and to holding firms and individuals to account as and when that is appropriate.
And in identifying cartel-like activities within the banks, within the insurance companies, is there sufficient legislation there to allow you to probe all of that? For example, this committee is dealing with the insurance companies at present in the context of public liability or car insurance and so on. And it is extremely difficult to deal with them because they continue to obstruct, in a sense, the work of the committee, because they do that not in a very clear way, but it is an obstruction. The non-delivery of key information, for example, in the insurance industry itself. And I would like to see the central bank having such a role that once you make your first phone call to the bank, the offending bank or insurance company, that they'll shake in their boots, because the day has long passed now that we should be, afraid of the banks. They've had a clear run of this, and they've blackguarded their customers and their different clients and so on. And they've caused an awful lot of damage to the Irish economy and to Irish society. And Irish people, people that are doing business in Ireland with the banks, want to see a far greater transparency, far heftier sanctions, and a central bank that shows no fear in dealing with the insurance companies or the banks. That's what they want to see. Because in all of this, and I said this at a recent meeting under Judge Hedigan, isn't it? At that culture board where we were giving our opinion on various approaches that they have, that what's missing in an awful lot of the conversation here is the customer and the protection of that customer and that customer's rights. And the central bank, and this is just an opinion of mine, the central bank is weak in consumer protection. And part of this holding them to account under this new regime is customer protection. I mean, I'm sure you're familiar with, you obviously would have complaints coming in and out of the bank, and you have your own in-house meetings, but the manner in which banks and vulture funds, the manner in which they treat customers is just unacceptable. It could be unacceptable in any society. And it's hard when you see them being called out for this behaviour or conduct, and nothing happens. So you're dealing with a banking sector that has been out of control for years. They've had no controls on them, and they've got away with murder. And then you have a consumer or a customer of the bank, and they've lost trust completely. And they believe the law is heavily weighted on the side of the banks and not on the side of the customer. And it will be up to the central bank to prove that that's not the case by your actions. And I'd like to feel that you're up to it. I'm not saying that you're not, but I'd like to see that you're up to it, because we have seen the banks here and they just totally stonewall us. They ignore us. They'll do all sorts of plough moss when they're in here, but when they go outside that door, they go back to the same old game again of turning their customer over for an extra euro. That's not acceptable anymore. How would you respond to that?
So let me take. So I think customer protection is absolutely at the heart of this. It's at the heart of our proposals, and it's at the heart of how we approach the regulation and supervision and enforcement of financial services sector. The proposals we have on the table, in our view, are designed precisely to help address the issues that you identify, Mr. Chairman. They are basically, in short terms, they're basically saying, first of all, we want to know who is responsible for what. So no more can there be a lack of clarity within the bank or an insurance company or another type of firm as to who is responsible for what areas and what responsibilities within the bank. So the issue of, you used the phrase circling the wagons. This makes it more difficult to circle the wagons, because we'll be able to say, well, look, this was in your bailiwick, you're accountable for it. Now the question is, did you take all reasonable steps? I think that's very important. Secondly, it sets out what are the standards to be expected. So it puts the customer's interests as a basic standard that must be met. Acting honestly and with integrity as a basic standard that must be met by all within financial firms. Acting professionally and with due diligence as a basic standard by all people. And then at the senior level, there's additional standards. So have you taken all reasonable steps to organise your area effectively? Have you taken all reasonable steps to oversee the people to whom you delegate responsibilities? Have you taken all reasonable steps to make sure you comply with regulations? So it allows us to hone right in and say, here's where the issue lay. Thirdly, the proposal is to simplify and unify and make more straightforward the ability to pursue individuals. So no longer would we have to say, first of all, we show that the firm created a breach, and then we can link through participation in the individual. Now we can simply say the individual is at the heart of this. So I think this regime is precisely what is needed to help address the concerns that you articulate, and it is reflective of our absolute commitment to the effective regulation, supervision and enforcement in respect of the financial services sector. You mentioned the issue of insurance companies. Let me say a little bit about that, because of course the Central Bank is very involved with the work of the Cost of Insurance Working Group. We have also been very involved in the development of the claims information database for motor insurance that is up and running. In respect of public liability and employers' liability, the work is now underway to assess the viability of such a framework. So I think in terms of clarity around this, we have made good progress. And I know there's a lot of work going on under Nicholas Kearns and others in terms of other aspects of this. And it is a multifaceted piece of work. But at least from our perspective, the work we are doing in that space to try and bring more clarity is progressing well.
Thanks, Gerry. Chairman, if I could also just add, I think in the context of consumer protection supervision and what we're looking to do there, in the first instance, I would say that where we have been over the last number of years increasing the resilience of the firms within the financial system and the financial system itself, that is actually protecting consumers. So if you have institutions that are better capitalised, better liquidity positions, are able to, and working with them in terms of recovery and resolution, so that if they get into difficulty that they can recover or they can be resolved without recourse to the taxpayer, that is better for protecting consumers. Specifically in the context of consumer protection supervision, speaking for my colleagues in that area, we are very committed to increasing our scrutiny in that particular area of conduct risk, and that's about embedding a consumer focused culture within those institutions. And what does that mean in practice? That means, I suppose, historically we would have, and we will continue to do, sectoral based work in relation to looking across sectors or maybe looking at specific products across sectors. But now our intention is to actually look at the more higher impact firms in specific areas and conduct a model of firm specific supervision on those firms, which we have been in the prudential area doing for many years. So that's a slight change in the context of what we've been doing previously, but that's kind of heightening our kind of conduct supervision. But also we'll continue to challenge the banks and the management in the context of a specific emphasis on behaviour and culture, and taking the work that we have done in relation to the 5 institutions from last year and bringing it forward.
I wonder if I might just add in the context of enforcement, just to give a sense maybe as to what an enforcement investigation involves and the use of the powers that we have. An enforcement investigation will involve the production of documents under statutory requests. It will involve the conduct of interviews of staff and former staff of institutions, potentially on a voluntary or indeed a compelled basis. It can involve listening to voice recordings. It can involve authorised officers of the Central Bank on site. It can involve the review of CCTV footage. So just to give you a sense of what the enforcement investigations will look like in terms of how they can be conducted in the context of the powers that we have at the moment.
I'll come to Deputy Quinlan as a question, but just to say to you that the insurance business, for example, we read in the papers how insurances have dropped and that there's a saving of 20% now and 25% and all this sort of thing. And that's on nonsense. You know, we have cases here where public liability insurance, for example, on a little pub in Carlow, went up to €22,000 a year. The person that owns it has to get it insured outside of the country, pay the first €5,000 of whatever claim might be made. And it's extremely difficult to deal with the spin that's put on this story by the industry and to deal with the reality. And people turn to the central bank consumer protection and whatever other arm you have, to get the real story, to get what is really happening in the industry. And that's what people, I think, are looking for now. And I was disappointed, I have to say, with the makeup of the new board under Judge Hedigan. Because one of the things that we've learned during the whole tracker issue is that the banks will rush to stack the case, or stack the house, if you like, against the individual. So you're dealing with a rigged deck of cards here. And that applies to the insurance companies as much as it does to the banks. And then under this new board, it's paid for by the banks. And when I look at the membership of that board, with all due respect to every single one of them, I see it weighted heavily to the banks. I don't see the consumer represented there in the significant way that I would have expected. And if you're changing the culture within the bank, the first thing that you'd like to see is that this particular board, that they would give up ownership of it and allow people who are critical, who have a role to play in terms of bringing about the transparency that's needed, being central to it. But the banks are watching it and holding ownership of it in a way that I don't like. I'd prefer if we didn't have the usual suspects on all of these committees and boards that you see going on. And how will you engage with them? Or will you engage with them?
So on the insurance side, so we are very, very conscious of the high degree of concern about and interest in the PL/EL insurance issue. And as I said, we are engaged with the Coastal Insurance Working Group under Minister of State Deasy, and I share the view that what's very important in all of these situations is to cut through the narrative or the story and to see what is actually going on. And we certainly, in terms of the implementation of our mandates, whether that be to ensure that firms are running themselves effectively, provisioning properly, doing their business as they should be doing it, and treating customers fairly and in the customer's interests, that is being clear about what is happening is at the heart of our approach. On the Banking Culture Standards Board, that is an initiative of the banking sector. As I said earlier on today, we regard it as a helpful development, but for us, what is most important is what is happening within the banks, and for us, making sure that the banks are responding to the need to improve their standards, their conduct, their culture, and we are very focused on the framework that we have put forward here as what we think is what is really needed now to drive that forward. So yes, these other things are helpful, but for us, we are focused on what is.
When will all this be in place, in gear? When will you have everything in place to suit you? Legislation, regulation, whatever it might be. Well, when will you be engaging directly with the banks on this issue? Well,
we are already engaging, to be very clear, directly on this. So again, we are in the hands of the Oireachtas on this in terms of when the legislation is available. But let me say that we are working now on the assumption that this legislation will be put in place. So we are working to prepare what we think the regulations and the guidance would be, and we have a plan to consult on that. We think this is significant. It does need public consultation as soon as may be practical. But we do need to wait for the legislation to be there.
Deputy Quinlan.
Thanks very much. My question is about insurance as well, and the chair spoke quite well there about the impact it's having on businesses, communities, community groups, voluntary sector. Everyone is struggling, and the spin that's out there that premiums are coming down, people don't actually see that. My understanding is the CSO themselves will collect some of the data, would ring up an insurance company and identify themselves as being from the CSO and get the quote and the base on that system. So I'd ask you, do you have confidence in that? If that is the way they're doing it, would you have confidence that's confidence in that ability to get the proper stats as to what premiums are, whether they're going up or whether they're going down, because most people will tell you they're actually not going down. And Mr. Cross, you referred to the claims database, and the question that I have on that one is, could you briefly explain what you mean, what is the claims database, but particularly the main question is, who would have access to that? Go, Margaret.
So I'll say first of all that this is not the specific topic that we're coming here. So I may need to come back to you on the specific questions. What I will say is that both in the context of motor insurance and now PL and DL, there has been a long discussion, piece of work, and then implementation in terms of motor insurance of the claims database. And I think it is very helpful in terms of, in terms of trying to understand. Okay, so there's different discussions, different points being made as to what actually has been driving up costs and are costs coming down. Well, this allows you to see what is the case there. In terms of the access, off the top of my head, I can't remember precisely what the limitations of that are, but I can revert to you on that one. Yeah.
That's grand. I think we've.
Just a concern about the CSO, the way they collect the figures. Do you have any idea of that?
Again, I don't have a specific comment on that.
Okay, that's grand. That brings our meeting to an end. I want to thank you for coming along, and again, my apologies. I was late, and I wish you well in your work. Thank you very much. Meeting is now adjourned until 1:30. We're dealing with item number 7, which is the No Consent, No Sale Bill 2019, in the name of Deputy Doherty. Pleased to welcome FLAC and the Irish Mortgage Holders Organisation to the meeting. And before asking you for your opening statements, I want to advise you that by virtue of Section 17(2)(I) of the Defamation Act 2009, witnesses are protected by absolute privilege in respect of their evidence to this committee. If you direct by the committee to cease giving evidence in relation to a particular matter, and you continue to do so, you are entitled thereafter only to a qualified privilege in respect of your evidence. You are directed that only evidence connected with the subject matter in these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that where possible you should not criticise nor make charges against any person, persons or entity by name or in such a way as to make him or it identifiable. Members are reminded of the long-standing parliamentary practice to the effect that members should not comment on or criticise or make charges against a person outside the Houses or an official either by name or in such a way as to make them identifiable. I now invite FLAC to make their presentation, please.
I'd like to thank the committee firstly for inviting us to make a written submission which we furnished in March, and to address it today in relation to this important issue that are raised in this bill. We note the recent submissions and contributions made to this committee, in particular on the 2nd of April, and the opinion furnished by the European Central Bank. We don't intend today to reiterate our original submission, but just wish to draw the committee's attentions to a number of points which we have fleshed out in a supplemental submission having regard to the other submissions that have been made. The first point I'd like to make is in relation to inequality of arms. As things stand, there's a significant inequality of arms between the lender and the borrower. The borrower may have no meaningful influence on the content of the terms of the loan and may be wholly unaware that the lender is reserving the right to sell the loan on to an entity of its choice. Even if the borrower is aware of the provisions, he or she may not be in a position to meaningfully negotiate individual terms and conditions in relation to what are in effect standard terms in such contracts. We believe it's unfair to imply into such an agreement an irrevocable consent to the transfer of their mortgage in any circumstance. And we've set out in the written opening statement an example of what we believe to be a typical standard credit clause, which provides that the borrower hereby acknowledges the lender's right, without further consent from or notice to the borrower, to transfer the benefit of this letter of offer, the loan and the lender's mortgage security, including any life assurance policy or policies over the property, to any person, company or corporation on such terms as the lender may think fit, without further consent from or notice to the borrower or any other person. I think what's particularly significant about this is that it's an absolute right, not subject to any preconditions whatsoever, such as the specific circumstances affecting the borrower or the occurrence of a certain level or duration of arrears. We'd like to draw the committee's attention to the provisions of the EU Directive on Unfair Terms and Consumer Contracts. Article 3 of this directive provides that a contractual term which has not been individually negotiated shall be regarded as unfair if, contrary to the requirement of good faith, it causes a significant imbalance in the parties' rights and obligations under the contract to the detriment of the consumer. The fairness and enforceability of such clauses to sell on that are in the current standard terms or conditions hasn't yet been adjudicated on by the High Court, but we believe are vulnerable to challenge. Our second point is in relation to the Central Bank's report on the effectiveness of the Code of Conduct on mortgage arrears in the context of the sale of loans, which was furnished to the Minister for Finance and Public Expenditure in 2018. First, we recommend, and have done for some time, that the provisions of this code need to be given legislative force in order to ensure that all parts of the code are expressly admissible in repossession hearings. But secondly, we do not share the view of the Central Bank which was expressed in this report furnished to the Minister for Finance. In the course of the recent contributions, the Central Bank reiterated the view which is expressed in the report, that existing arrangements must be maintained by unregulated loan owners. Specifically, the Director of Consumer Protection stated to this committee that where a loan has been sold by a bank to a non-bank, existing arrangements are honoured. We feel that there are many protections in the existing consumer protection framework that keep borrowers in or facing arrears at the core of the process and protected. The bank's view that where the borrower's circumstances have not changed at the point that a review of a long-term arrangement takes place, that regulated lenders and ULOs must comply with the terms of the arrangement in place, we don't believe that that's actually supported by the relevant rules, in particular 42 and 43 in the Code. We fail to see any clear provision in the Code that imposes a specific legal obligation on a lender reviewing any arrangement to continue that arrangement where the borrower's circumstances haven't changed. Even if it was to be interpreted that there was such an obligation, we would question its enforceability in strict legal terms. Our fears in this question are highlighted by the following passage, whose substance reoccurs at a number of junctures in the Central Bank's report, where it states that the Central Bank cannot interfere with the strategy and commercial decisions or the legitimate contractual rights of lenders where such firms are complying with their regulatory and contractual obligations. Regulated entities are entitled to rely on their contractual rights and make their own commercial decisions. If it is the case, as the bank maintains, that it can't interfere with the lender or owner's contractual rights, we would ask how it can then impose an obligation on an unregulated loan owner to continue a long-term restructured arrangement against its will when there is no regulatory or statutory obligation to do so. The next issue we want to highlight is what actually constitutes a non-performing loan. The principal narrative up to now has been that the sale of loans to funds is justified to reduce the number of NPLs down to a perceived ECB target of 5%. However, the ECB opinion to this committee didn't provide a definition of non-performing loans. The last quarterly statistical mortgage arrears report for the bank to the last quarter of 2018 concerning principal dwelling houses seems to clearly show that a significant majority of almost 14,000 loans apparently acquired by unregulated loan owners in the course of the last quarter are performing restructures. The Director of Consumer Protection at the Central Bank informed the committee in April 2nd that there are currently more than 110,000 restructured arrangements on such loans. She added that in 87% of these cases, the borrowers are meeting the terms of the arrangements and that these arrangements are working for those borrowers. In more specific detail, the latest figures suggest that there are currently 504 restructures of PDH mortgages in place. Over 27,000 of these are split mortgages, over 36,000 are capitalisation of arrears arrangements, and over 13,000 are term extensions. 19,323 come under the other heading, which are defined as mainly comprising of accounts that have been offered a long-term solution, pending the completion of 6 months of successful payments. This category all includes a number of simultaneously agreed term extensions and arrears capitalisation arrangements. Together, these long-term arrangements amount to 87% of the restructures of PDH mortgages, or 86% are classified by the bank as meeting the terms of the arrangement. Are these considered non-performing loans or not? A key question also arises as to why loans with such long-term restructure arrangements in place would be sold on in the first place. If the sales of such loans are allowed, what was the point of the extensive mortgage arrears resolution process under the bank's Code of Conduct, which the Central Bank actively promoted and which many borrowers and lenders sought to comply with? Is it the case that the ECB considers these performing long-term restructures to be non-performing loans? And we note the comment from the Deputy Governor that it's not for the Central Bank to stop the sale of either a performing or a non-performing loan. In relation to enhanced protection for consumers, we believe that legal protections need to be enhanced for consumers whose loans have already been sold to funds. In addition to putting the Code of Conduct of Mortgage Arrears Code on a statutory basis, this bill could enhance protection for consumers by incorporating the 6 recommendations made in our original submission, which I've replicated here and I won't read out. We also wish to draw the Committee's attention to the relevant human rights and equality standards that apply to this discussion and which we note are wholly absent from the presentations and submissions from the Central Bank and the Department of Finance. Section 42 of the Irish Human Rights and Equality Commission Act requires all government departments and statutory bodies like the Central Bank and the Department of Finance to consider in the performance of all of their wide-ranging functions how they will advance equality for the groups protected under the equality legislation and how they will protect the human rights of all citizens. We note that the Central Bank has committed in its strategic plan to carry out a detailed assessment of the human rights and equality issues relevant to its functions over the period of this plan. We'd also like to point out the United Nations General Assembly guiding principles on human rights assessment of economic reforms, which provide that states and other creditors, including international financial constitutions, must carry out a human rights assessment before recommending or implementing economic reforms or policies that could foreseeably undermine the enjoyment of human rights. It requires that human rights impact assessments should seek to identify and address the potential and cumulative impact of measures on specific individuals and groups. A human rights impact assessment of economic reforms requires a diverse range of both quantitative and qualitative data in order to ensure compliance with the human rights requirement of non-discrimination and that due attention is paid in particular to groups at risk of marginalisation or vulnerability. It is essential that indicators used to provide information are disaggregated by issues such as gender, disability, age, region, ethnicity and income. We believe that the submissions and presentations from the Central Bank and the Department of Finance make no reference whatsoever to any such assessment, and it is likely that their views and opinions that have been furnished to this committee have been formulated in the absence of such an assessment and without such data having been gathered. The reality is that we have very little information about the people in long-term arrears in terms of their gender, their age, their employment status, their income, whether they're on social welfare or not, the extent to which they have disabilities and/or caring responsibilities. And we would ask this committee, can the Central Bank and the Department of Finance state with accuracy, based on properly gathered disaggregated data, what is the likely effect of borrowers of allowing creditors to sell to vulture funds without further regulation? Has there been an assessment as to the likelihood of borrowers being exposed to acute deprivation such as homelessness or extreme poverty? We note that very recently the UN Special Rapporteur on Housing, Liana Farrer, has sent a letter to the Irish Government and was critical of the lack of regulation of vulture funds. In that letter, she talks about the need for a transformation of the relationship between the government and the financial sector, whereby human rights implementation becomes the overriding goal. And she refers to the financialisation of housing. We'd end with pointing to Article 2 of the preamble to the UN Guiding Principles that states that obligations under human rights law should guide all efforts to design and implement economic policies, and that the economy should serve the people, not vice versa. And myself or my colleague Paul Joyce, who drafted these submissions, are happy to answer any questions you may have.
Thank you very much. David Hall, an Irish Mortgage Holders Organisation.
Thank you, Chairman. Chairman, Deputies and Senators, thank you for the invitation to address you on Deputy Doherty's No Consent, No Sale Bill, which you're considering. The Irish Mortgage Holders Organisation is one of only 2 debt charities within the state. We've helped over 10,000 families have their mortgages restructured since we've been established in 2012. It is with this frontline experience that I make this address today with the support of my entire team. We are at a critical stage in families being fed to vultures, and Deputies and Senators, you can note that I did say fed to vultures, because it's not just loans that are being sold, but real families, real people and real lives that are being fed to vultures. And this is a real social issue. These sales are a result of incompetence from banks in not offering realistic restructures to customers of mortgage arrears. The Central Bank has been a party to this failure by limiting the bank's options. Banks have resisted the personal insolvency legislation and taken various legal challenges to aspects of the legislation to prevent its impact on writing down debt. We're amidst a bureaucratic corruption where large bodies such as the Central Bank and the Department of Finance can utter unevidenced statements with authority designated to scaremonger. A state-supported scheme is pitching citizens against each other with misleading commentary about the effects of interest rates if such a bill as this was passed. This has been recently demonstrated where warnings were issued ahead of Deputy McGrath's Vulture Fund Regulation Bill, and also when commentary was made in relation to the low numbers of repossessions and the ineffectiveness of repossessions. Only last week again we saw AIB reduce its interest rates, which is having the complete opposite effect to the commentary being provided. While trying to protect banks, they failed to state this is not an ongoing mortgage arrears issue. This is a historic issue. This is not currently an active concern to banks and therefore has no current effect upon the banking system, and this should be addressed as a standalone issue. The Central Bank bizarrely says vulture funds are okay, and this is so inaccurate it's frightening to think that the Central Bank has a consumer protection function. They published a report last October and reported on a period pre-mass sales of loans to vulture funds by Permanent TSB and Ulster Bank. No competent body, knowing that such numbers of loans were about to be sold, would have chosen such a window to carry out any report on vultures' adherence to a voluntary code unless a particular finding was being sought. There's been a banking culture of blaming customers who've been in mortgage arrears, and this has radiated around banks and led to disgraceful behaviour by banks. Banks have forgotten the part that they've played and destroyed thousands of families, and indeed the direct responsibility of the loss of many lives. As a citizen, it is concerning to hear the Taoiseach Minister of Finance state that vultures are good and that protections available to those in mortgage arrears carry from the bank where a loan is sold to a vulture fund. This is simply not true. The protections referred to are administrative processes via Code of Conduct of Mortgage Arrears. This is a voluntary code where the Supreme Court in Irish Life and Permanent v Dunn in 2015 has confirmed it's a voluntary code. Furthermore, there is no mandatory solutions that must be offered under the Code of Conduct of Mortgage Arrears. The frontline experience of the IMHO is whatever CCMA solutions may have been offered by mainstream lenders historically and at present, vulture funds simply do not offer these solutions at all. Vulture funds want to take the family home, sell the home and leave with a profit. In addition, in Clark v Stepstone Mortgages, Judge White ruled that where a lender does not have to give a family a solution, even if they're eligible for a solution. And in this case, it was mortgage to rent, where the family were eligible for mortgage to rent, and he ruled that no such a solution was required. Those who believe banks will conform under a voluntary code have a lot to learn. Indeed, the new Irish Banking Cultural Board may discover this soon. Banks only respond to severe sanctions, direct regulation and consequences. And in addition, and despite it being 2019, the Central Bank cannot still accurately report on repossession numbers and court proceedings, as the current system is fundamentally flawed. Vulture funds are interested in assets and they price the purchase on their value in a time frame which they can repossess and sell on. Banks must take responsibility for contributing to cause this crisis by recklessly lending to borrowers. Banks have restructured 116,000 family home mortgages. This is welcome. The spin for the Taoiseach and the Minister for Finance is unfair that the protections transfer. The truth that protections are administrative and do not provide any solutions to be provided by lenders to customers. This is deeply concerning in the respective officials don't understand the limitations of the Code of Conduct in mortgage arrears. The no consent, no sale bill is an extremely important one to apply pressures on banks to do as they should always have done, to create aggressive restructuring options rather than the lazy approach that they've taken to date. Banks resisted every effort to write off debt, although there now is a theme of willingness to write down debt for vulture funds, but not for customers. A spectacular environment was created to welcome vultures into Ireland, including magical, charitable and tax status. This showed a policy of intent. In my view, the most egregious step taken by a bank against customers recently was permanent TSB selling restructured and compliant loans to a vulture fund. I believe that the Insolvency Act needs to be revamped, and there are proposals on a multi-party basis been submitted to the Department that have not been implemented so far, as many vulture funds will need to be tackled using the insolvency legislation. There have been some very successful personal insolvency arrangements recently that are exceptionally good, and I think this will be a tool in the armoury going forward. And finally, we might just see the Act coming into its own, but understaffed, under-resourced and still privatised. By way of example, I've included in my pack ahead of today's hearing 2 cases through iCare Housing, of which I'm the voluntary CEO, where we offered to buy 2 homes for families who were deemed eligible for mortgage rent. Without patronising the committee, I want to remind all that to be eligible for mortgage rent means you have very low income and are eligible for social housing, and that the home you're in is modest and in line with social housing homes. In the first case, Star Mortgages refused an offer of 15% below the open market value, and in the second case, Shoreline, through Pepper, refused an offer of 8% below the open market value. Promotoria, whom Ulster Bank sold loans to, does not do mortgage to rent. Permanent TSB have sold thousands of loans to Start, and Ulster Bank have sold thousands of loans to Promotoria. So what did the vultures pay for these loans? A 50% discount, maybe 60% discount. They want the money and they don't care how they get it. And we have a housing and homeless crisis, and the above 2 families will eventually transfer to emergency accommodation. This is how vultures operate. They are not a friend to families in mortgage arrears. Going back to those who made various comments in relation to vultures and the deal they do, and explaining that vultures have bought loans cheap, therefore they must do good deals. This is simply false, and there are serious questions of competency around those making these vulture-friendly comments. For clarity, vultures are great in the event that you want to surrender your home and have your debt written off. However, if you want to keep your home and stay in your home, as most people do, then vultures are not in the business of doing a deal, restructuring or long-term solutions. In conclusion, vultures are bad for Irish families. An incompetent commentary around their willingness to do deals adds insult to injury to families that are affected. If you're in mortgage arrears and facing the prospect of dealing with a vulture, you're at significant risk of losing your home. We hear vulture lovers' comments and numbers of repossession orders granted by banks by comparison to vulture funds to defend their supportive stance. They seem to forget that banks have been at this since 2009, while vulture funds have only recently been getting started with family homes. The 2 cases above have now been terminated out of mortgage rent and moved to being repossessed. This is a true reflection of the actions of vultures, not the fairy tale version promoted by some. The no consent, no sale bill is an essential tool in helping families in mortgage arrears, as we are facing an avalanche of loans being sold to vultures over the coming 12 months, and these families face a very uncertain future. To those who say the bill is unconstitutional, we have a mechanism, we have a court process. Let the courts decide on its constitutionality. Thank you.
Thanks very much, Mr. Hahn. Deputy McGrath.
Thanks, Chair. I'd like to welcome our witnesses and thank you both for the submissions and the opening statements as well in relation to this bill. If I can just start with the issue of the CCMA and its non-statutory basis, as both of you have referred to. So can you just clarify that for me? I don't mind who takes it, but when it says early on in the CCMA, this code is issued under Section 117 of the Central Bank Act 1989. Can you just explain why it's not statutory? I think the Central Bank dispute that, or the Minister certainly disputes that. He says it has a statutory basis, but does that not mean it's statutory? Can you just take us through that? I don't mind who takes it, but this issue now is knocking around for a while.
Yeah. Well, at the beginning of the code it says lenders are reminded that they are required to comply with this code as a matter of law. So that looks as if it's legally enforceable. And it is indeed issued under Section 117 of the Central Bank Act 1989. However, it's not a piece of primary nor secondary legislation. So it hasn't been passed by the House of the Oireachtas, nor has it been signed into law by the relevant minister. That would be the Minister for Finance in this case. What it denotes, what it controls, is the regulatory relationship between the central bank and the mortgage lenders, which it regulates. So, for a start, as you probably know, Deputy McGrath, there hasn't been a single sanction, to my knowledge, imposed on a lender who has failed to comply with the code. But in theory, it's subject to the Central Bank's administrative sanctions programme. It is not, by my understanding, an offence, nonetheless, to breach the terms of the code. And David mentioned the decision of the Supreme Court in Irish Permanent PLC and Dun and Dunphy. And that was a seminal case, really, to test the enforceability of the arrangements entered into by lenders under the terms of the code. And what the Supreme Court basically said was the only measure in the CCMA that was legally enforceable was the 3-month moratorium on the bringing of proceedings against a borrower when they had been exited from the mortgage arrears resolution process. That there was nothing else in the CCMA that the court could discover that was precise and tangible enough to provide legally enforceable rights to borrowers. And the Supreme Court went further and said that if it was the intention of the central bank or the government to even up the relationship or the power between lenders and borrowers, then it suggested really that primary legislation was necessary to do that. And therefore the call from ourselves and others that the code be put on a statutory basis. If it was a ministerial regulation, and if it specifically stated that this code is admissible in legal proceedings in the courts, then it would be of a different order in our view.
So in essence, you are saying that this code is a voluntary code?
It's a regulatory code. So if a lender refuses or neglects to comply with the terms of that code, the central bank may conceivably take action against that lender, but under its own internal administrative sanctions programme. That seems to us to be the extent of the action that can be taken against the lender. And as far as we're aware, even though the central bank has on occasions carried out inspections and has on occasions determined that some lenders have not complied with the requirements of the code, they still, as I understand it, have yet to impose a single sanction upon a single regulated lender.
Okay. Sure, yeah.
The code is slightly misleading in the sense the code is an administrative code. Section 38 and 39 allude to a variety of solutions that can be provided. Nowhere does it require any of the lenders to provide any of those solutions. And it is quite misleading when people use the code in its entirety. It is an administrative process and has a very unfortunate P45 letter which people get at the time of their being evicted. It is an administrative code. So even if it was on a legislative basis, it actually would probably make little or no difference.
Okay, well that's a critique of the content of it as well.
Yeah, but it is misleading that people think because the code lists a number of solutions, that is like going online and Googling the list of solutions available. They've just put them in there. And in Clark versus Stepstone, where mortgaged rent were deemed eligible for social housing, Justice White said, sorry, they're not required to provide it.
Okay.
The other point, I suppose, about the code is that from a fair procedures point of view, it's quite deficient in the sense that, lenders must look at a variety of potential solutions, but as David has said, don't have to offer one. And even if one is offered and the borrower is not happy with it, there's an appeal, but it's to the lender's appeals committee.
Okay.
And there's a failure under the code to specifically provide that borrowers are entitled to the full detail of the deliberations of the lender under the mortgage arrears resolution process in order to frame their appeal. So from a fair procedures point of view, it's completely deficient.
Okay, and then in the FLAC submission, or in the opening statement, you referenced the standard clause in the mortgage contract that enables the bank, let's say, to sell on the loan. And you say, you're kind of saying that that could be challenged and that under the EU directive on unfair terms in consumer contracts, that is it your view that that clause, which I think you're saying hasn't been adjudicated upon by the High Court at this stage, but that could be struck down? Is that what you're saying?
Well, I think
who knows what a court would decide?
Yeah, I mean, the Unfair Terms Directive hasn't really got any huge traction in the Irish legal system. It's much underused. I think one of the problems was that there's a very restricted number of entities that can refer a term to the Circuit Court or the High Court to have its fairness tested. Ironically, it includes the Central Bank and the Competition and Consumer Protection Commission. But I suppose the point that we're making is that there's a fundamental lack of fairness in the contract in the first place that allows for the sale to take place. And certainly that would be an issue, I think, that would arise in any assessment of the constitutionality of the bill. In practice, borrowers do not know this term is in their mortgage contract. They're not asked for their consent, nor are they ever informed, except at the very last minute, that this is happening. And there's a fundamental imbalance there.
Sure.
It is an open question, I suppose, what the courts would make of whether this is strictly an unfair term. But I think the point we're making is that the imbalance is clear. These are pre-drafted terms and contracts to which the consumer has no opportunity to contribute.
And can I ask your opinion, given that that clause is in the mortgage contracts, it's in existing contracts, if this bill is enacted and becomes law, can it be applied in respect of contracts already written where that clause is there, which has been signed up to by both parties? What's your legal view on that?
That's a very difficult question, obviously, because the contract is already in existence and for it to be overridden. But as I understand, the intention of the legislation is that it will be retrospective. It can't but be retrospective to have proper effect. And can it be? I'm asking your legal opinion. I think there's a difficulty sometimes about the retrospectivity of legislative provisions. Again, that's a matter to be considered, perhaps by the courts in due course. But as without it being retrospective, I don't think it can have proper effect, because if it only applies to mortgages drawn down from this date onwards, its purpose is futile, I think, to be honest.
Okay. Can I ask as well, because it's repeated ad nauseum by the central bank and the minister and others that the protections travel with the loan and that the borrower is no worse off if their loan is sold on to a so-called vulture fund. And again, you raise the issue here, it's in the FLAC opening statement, that you don't see any specific legal obligation on the new loan owner to honour a restructure agreement that has been entered into. So is there a legal basis or not for that? I mean, where does it say in the code or in any other provision that the new owner has to respect an agreement? Is that written down anywhere?
No.
No.
No, I mean, Rule 43, if you'll give me a few seconds just to read it. It says a lender must review an alternative repayment arrangement at intervals that are appropriate to the type and duration of the arrangement, including at least 30 calendar days in advance of an alternative repayment arrangement coming to an end. As part of the review, the lender must check with the borrower whether there has been any change in his or her circumstances in the period since the alternative repayment arrangement was put in place or since the last review was conducted. Where there has been a change in that borrower's circumstances, the lender must request an updated standard financial statement from the borrower and must consider the appropriateness of that arrangement for the borrower, full stop. So there is no, in answer to your question directly, there's no specific provision that says where the borrower's financial circumstances have not changed at the point of review, there is a legal obligation on the existing lender or the new or the purchaser of the loan to honour that arrangement. And the central bank is saying that it's strongly of the view that the funds will honour those arrangements, but we don't believe that there's anything legally enforceable there. Now, there is a view, by the way, and I've heard it, I think you've heard it in this committee yourselves from permanent TSB, that, for example, a split mortgage or other long-term arrangement is a variation of the original mortgage. And there's a legal question there as to, if you put in place a long-term arrangement over time, does that actually change the underlying mortgage in the first place?
And just by way of example, so permanent Ulster Bank's loan sale to Promotoria, we must have 25 cases that are eligible and agreed by Ulster Bank as being eligible for mortgage to rent. They've now been sold to Promotoria, and Promotoria don't do mortgage to rent.
Okay. Final question, it's probably one for you, Mr. Hall. So again, we hear from the Minister and the Central Bank that, look, that there's no data to show that borrowers are in any way disadvantaged, that the vulture funds are more likely to take enforcement proceedings, that the repossession stats don't bear out the claim that the vulture funds are more aggressive. So can you give us your response to that claim that we repeatedly hear from the Minister and the Central Bank, that borrowers are no worse off? There's no data to back up the claim that vulture funds are more likely to repossess houses. Yeah,
Factually incorrect is a simple response to that. And the vulture funds have come late to the repossession activity. Many had years of dealing with commercial loans and buy-to-let investment properties, and only recently. And even the fact that the Central Bank, like the Minister asked at the time of your own bill, Deputy McGrath, going forward, the Minister asked the Central Bank for a view in relation to the funds or their servicing agents' adherence to the Code of Conduct, to actually undertake that work in the knowledge that before this committee, the same Central Bank told you that they're aware and notified in advance of sales and loan sales. They were aware of 13,500 loan sales from various, between Permanent TSB and Ulster Bank, being sold to funds. To actually carry out that review at that time, given their consumer protection component, and I know ourselves, FLAC and others, were engaged with, the manner by which we were engaged with, the manner by which we were informed of how our engagement was being considered, in my view, was very misleading. It was clearly stated to the Central Bank, the Code of Conduct provides no solutions and provides no protection for anybody. So even, Deputy, if it was transferred to the funds, which it's not transferred to the funds, like the classic example is in relation to the most vulnerable cohort of people are those eligible for social housing and eligible for mortgage rent. The fact that in the two examples given today, 12% and 8% discounts, and the Minister and others make some bizarre statement in relation to, well, sure, the funds bought them cheap. Logic dictates they're going to do a better deal. That is just factually incorrect. And again, I respectfully say, we're doing this every day with a team of people who are day in, day out, with our colleagues in MABS and other organisations and the personal insolvency practitioners around the country. I do believe the Insolvency Act needs an urgent review from this committee and the Justice Committee to provide some protection to customers, but it is absolutely infuriating to hear our Taoiseach and the Minister for Finance, and whatever advice they're receiving is factually incorrect and is, dangerous commentary to be making and misleading to people, in my view. They're not safe in the hands of vultures. That is a statement of fact.
Yeah, Chair, I just want to just commend both organisations for the work that they do with borrowers. I think you play a very important role, and you've helped an awful lot of people collectively. And I apologise I have to go to another committee which is clashing at this time, but thank you for your work.
Just on that note, Deputy McGrath, we had been invited by your organisation to visit and see some of the
to visit and to see some files live. We've gotten permission from borrowers to see them. Rather than anecdotal information given, to answer your question, Deputy, I think the best way to do it is to randomly select a number of files within our own organisation, which is a number of thousands that are there live, a number of hundred that are there with funds, to see the communication, the engagement and the responses first-hand, as opposed to the anecdotal information. And remind you, there are only 2 registered debt charities in the state. There's hundreds of homeless charities, hundreds of cancer charities. It's not for a reason there's not only 2. It's a difficult space to be operating in, but that's where the information is, and that's where the evidence is, as opposed to the anecdotal stuff from a Taoiseach Minister and other parties and other commentators.
Due to a clash in the Dáil here, we weren't able to attend. We did take up the offer of your invitation, but I think that after Easter, if the clerk contacts you again, maybe we can set up a meeting that's suitable to all of us.
Yeah.
Is that okay?
Yeah, perfect.
Deputy Doherty?
Michael. Thank you, and I want to welcome both guests to the committee this evening. Gurmaiga Funyan Corlaher for your presentations and the extensive submissions, and indeed some of the case studies as well in relation to the case. You know, I'm obviously the sponsor of this bill, but if we were to listen to much of official Ireland, the Central Bank, the Department of Finance, and some others, you would have to believe that there is no problem, these loans being sold to vultures, that everything's fine, that everything's going to work out grand, that there's no difference whatsoever. Sure, the Minister himself would have no problem with the vulture holding his loan. Maybe if you have a ministerial pension, maybe you wouldn't be as concerned at these things as maybe many others. But in your view, and maybe I'll put this to David Hall first, as somebody who's, as you state, that your organisation has assisted 10,000 individuals through debt restructuring. In your view, how does that stack up against the reality of what is happening on the ground in relation to how vultures are treating homeowners?
I would say it's slightly worse than you present, in the sense that the official line is not just that there is no problem out there. The official line actually is that it's better to be in the hands of a vulture. That's actually the most concerning part. And in other jurisdictions, you hear cults say that. Like, it is, you know, to engage with third parties, to look at the delay, and that's why the invitation was issued to the chair to come and see the engagement, the length of time of the reply, having to check with, and before this committee, when Permanent TSB and Pepper were here, you asked about Glen Bay, who owns Glen Bay, and it was the most bizarre exchange in the world. But even the engagement from the servicing agents to get consent from the Vulture Fund as to what happens next. We're now at the stage whereby our actions, in my view, answer your question, which is we're now revising our internal structures to look at putting all clients and customers of Vulture funds through the insolvency regime. We're wasting our time, we're wasting the customers' time engaging with Vulture funds in relation to restructures anymore, because they simply don't do them. And when we have the most vulnerable cohort of people who are eligible for social housing and eligible for mortgage to rent, where you have this bizarre situation where people are trying to apply logic, unevidenced logic that they believe, where it states that, well, a Vulture fund bought it at a discount. Like, I have dozens of those cases I gave examples of today. And this is pre the sale. This is very important. This is pre the Ulster Bank's sale and the PTSB sale of customers. And to be fair to PTSB, we've negotiated a discount with those properties to make them work. But the discount doesn't follow to start. So those customers will not be eligible to go through for mortgage to rent. So it is factually incorrect to say that Vulture funds are easy and good to deal with. And I think the insolvency legislation is the #1 tool to fight these vultures, over the coming months and years. But it is absolutely torturous for customers, for our own staff, and for many advisors the length and breadth of the country trying to engage through a credit servicing firm. And I'd say it's worse than just misleading people by saying it's okay. It's far from okay, and giving the impression that everything is okay, and that you could actually be, in fact, better dealing with somebody who's bought your loan cheaper. Like, that's just the most bizarre, completely unfactual thing to say as official representatives in not just politicians but of department officials. And one of the department officials sat here and said, "We're here to speak truth to power." Like, it was embarrassing, because they need to actually understand the truth first before you can speak it. And it's void from any of the public commentary from the Taoiseach and the Minister for Finance. And I noticed at Christmas when the Taoiseach said about vultures were good and fine, and Minister Darcy said the same, he did qualify the following day by saying, based on the information we're provided, well, come have a look at the real information and the truth, and this bill would be a no-brainer.
Ms Barry or Mr Joyce, whoever wants to answer this, the department in particular, and by extension the Minister, rely heavily on the piece of analysis that was done late last year. You touch on this on your, not just touching, you deal with this in relation to your submission, both your opening statement and your previous submissions, in relation to the conclusions that has been found that there's no difference in terms of restructuring arrangements and so on and so forth. You obviously were part of that engagement, part of that process where they engage with you. I give you an opportunity maybe to outline, because they have, told us that they have engaged with organisations such as FLAC and to the IMHO, and this is the conclusions we have. So sit down and go back into your box and stay quiet, because everything is fine. Obviously, you make the point in your submission that my contribution to the department was very clear. It's far too early to be suggesting this, because the sales are only really ticking on now, and they will start to ramp up as in terms of procedures or enforcement as time goes on. But I give you an opportunity just to outline your view in relation to the reliability on that piece of work, as a way of suggesting that there is no difference between whether your loan is with a vulture or whether it's with a mainstream bank.
Well, I mean, to start with, and we won't waste too much time on this, but the nature of the consultation with ourselves, certainly we didn't feel it was satisfactory. There wasn't formal written submissions weren't sought. There were meetings held at which opinions presumably were recorded in some form, and then subsequently appeared in the report to the Minister. As I understand it, that work was carried out by the Central Bank in the latter half of 2018, furnished to the Minister in October, published in November 2018. So our simple point, which I think you've also made yourself, is that, and David has made it, that there wasn't enough evidence to come to the conclusion that they've come to. Now, in our original submission to this committee, we pointed out that in the course of Q4 2018, almost 14,000 loans navigated from regulated lenders to unregulated loan owners. But it seems that the significant majority of those, and this is at page 4 of that submission, the significant majority of those loans are performing restructures. So we find that very surprising, why they were sold in the first place. These loans, I think, are, one of the problems is most of them, and Deputy Burton asked a very salient question on April the 2nd. Yeah. She asked, what work did the department carry out in terms of looking at the profile of mortgage holders who are adjudged to be non-performing, even though their loans have been restructured and are being paid down? I don't think she got an answer to that question. And in our view, and obviously David has an awful lot of clients, FLAC doesn't, but we do quite a lot of work with the Money Advice and Budgeting Service and are, looking at files in that regard. A lot of the loans that are now in difficulty are ones where the household's problem is financial incapacity, and where there have been repayment arrangements in place. A lot of those arrears have been in place for 5 years, even up to 10 years, and that's the difficulty. The households don't have the financial capacity to make the kind of payments that we feel vulture funds sooner or later will be looking for.
Can I ask you in relation to, Deputy McGrath talked about the Code of Conduct and mortgage arrears, and look, the Code of Conduct and mortgage arrears is important. It's a protection. It's administrative, protection there, and there's questions which I agree with in terms of its legal enforceability and all the rest. But parking that to one side, isn't the real issue here that the problem is that the vultures can take a different approach from banks? This is what I believe, and it's not just that I believe, I have evidence to back this up, because I hear, many clients that come to me, we see some of the files, that vultures in some circumstances are just not interested in making the arrangements. You look at the structures that have been set up, we talked about Glen Bay there. It was the Glen Bay's vehicle was set up a couple of weeks before it was purchased. It's in an SPV. Scariff, which I've been talking about in the last couple of weeks, was the same. It's a company that was set up just a couple of weeks before Ulster Bank sold the 1.6 billion portfolio into it. The directors of it, if you're looking at the Companies Act, are the same directors of 360 other companies, and this is the problem, that your loans in it now. like, I've been trying to draw attention to the issue of that sale, for example, which was a €1.6 billion sale, obviously sold at a discount. I believe the purchase price might have been in the region of 900 million, made up of nearly equal buy-to-let and family homes, close to 3,000 buy-to-lets. But like, this is, for example, is a letter that I have from an individual. So the loans were sold late last year. Cabot, which is the administrator on behalf of Promontoria Scariff, wrote to them on the 18th of February, letting them know that they are now the holder of, they're now servicing the loan and it's no longer Ulster Bank. And then they get a letter the following week, 7 days exactly, saying, further to our correspondence on the 18th of February 2019 regarding the transfer of your mortgage account from Ulster Bank DAC to Promontoria Scariff Designated Activity Company, Cabot Financial Ireland has been appointed by Promontoria Scariff as the regulated entity responsible for providing mortgage administration service to you and to assist you regarding all your matters of mortgage. Very nice so far. Cabot has noted that there are arrears owing on the mortgage accounts number in the total of X amount. To assist you in clearing these arrears in full, the following payments options are available to you, and it gives the details of IBAN and Visa debit cards. Then it goes on to say, failure to contact our office in receipt of this letter and clear your arrears in full, underlined, within 30 days from this date of letter, leaves Cabot with no further option but to appoint a receiver over the secured property. That's not individual. Cabot have done this as a policy. There are thousands of buy-to-let, and this is, you know, I've raised it with the Minister of Finance, I've raised it with the Taoiseach there. There's thousands of buy-to-let properties that potentially are getting these letters. I know of quite a number of them that have got these letters. I know that it is policy now within Cabot to not take on any solutions, any arrangements, even when the situation is in positive equity. I have a file in my office with Cabot where it's in positive equity, the house has been sold, there is an owner there, they're actually in the house, and Cabot isn't willing to sign off on it because of this policy, which is what they can do, which is, we don't care, we own the loan, we have the right, you clear your arrears within 30 days or we're appointing a receiver to the whole portfolio. And that's what's happening. And the banks could have done the exact same thing, but it's not in their interest to do it because there would be an uproar. And the banks rely on us to keep their deposits flowing and loans and so on and so forth. So, like, how do we square the circle when we have a situation like this where vultures, you know, like the Taoiseach was saying today, that there's a responsibility on the central bank and in financial institutions when they're selling loans to make sure that the public good is looked after. But sure, there is no responsibility. There's no responsibility on the central bank or on Cabot or in any vulture fund to deal with the public good. The responsibility is in their contract. And their contract states, as you said in your opening statement, that they have the right to sell the loan without further consent. So, like, in the absence of something, you know, and given the amount of loans that we're seeing stacked up, and AIB are now considering another loan sale and so on, where is this going to end, you know, in your view, or any of your views? I know that's a bit of maybe a bit long-winded from me, but it's something I feel passionate about, because it's not just about how the vultures are treating homeowners or buy-to-let owners. There's tenants in all of these houses. They're going to get their eviction notices. Some of these families are going to end up into hubs, and we're going to see the same comments from those children as we heard the Ombudsman read out today. That's the real... Like, if Cabot is doing this, which the central bank confirmed to me that they're aware of the letters and they're engaging with them, but they can do nothing about it. As you read out in your opening statement, they can't interfere in the contractual arrangements between a client. If Cabot does this to all of his buy-to-let properties, what are we going to do as a nation with over 2,600 buy-to-let properties evicting their tenants in a couple of months?
Yes. Well, I have similar letters here, and it's rather disturbing to see debt collection outfits, or credit servicing firms, if you want to call them that, transferring loans in amongst each other. And we said in our original submission that the loan sale phase is towards the final end of a boom-bust scenario in the UK. in the late 1980s into the early 1990s. The same phenomenon which we could have predicted, and we did say to the Department of Finance, amongst others, prior to the credit servicing, well prior to the credit servicing legislation being passed in 2015, that this was a phenomenon that had happened in other countries. Loan sales, it's international business. And not only is the sale of loans to funds an international business, but the sale of loans on to other funds. So you get transactions going down the line. The central bank's position is, well, the credit servicing firms are regulated, and therefore they're a regulated entity, just like a bank is a regulated entity, and that suffices. We regulate them. The problem is the bank doesn't regulate them to the extent that they can actually tie their hands or force them to take certain courses of action. And if you look at the Code of Conduct on mortgage arrears, it's absolutely true. It applies now to credit servicing firms as a result of the Consumer Protection Regulation of Credit Servicing Firms Act 2015, as amended. But it only obliges the credit servicing firm to do the same as it ever obliged the original lender, which is to look at accommodations and decide for themselves whether they wish to offer an accommodation or not. So, as you quite rightly pointed out, the pillar banks, they have customers, branches, contractual relationships to maintain, they have a reputation to maintain in the state, and they don't want to be associated with the kind of tactics that funds get involved in, and therefore we're now seeing the most difficult part of this being shoveled on for somebody else to deal with, who won't have the same commercial scruples about it. And that's the danger.
If I was a vulture fund, I'd be delighted with the Code of Conduct of mortgage arrears versus any of the 4 pieces of legislation that are before the Oireachtas at the moment to deal with customers and protect consumers. Like the Code of Conduct of mortgage arrears is a spectacular failure and a fudge. And it gets referred to in relation to, it's a computer program that just differentiates timelines and dates for letters to issue and phone calls to be recorded. That's all it does. It doesn't do anything else, and it keeps being referred to by various people as if it is the Holy Grail. It is an abject failure of consumer protection from the central bank, who are completely conflicted. And as I say, having loan servicing agents, as Paul said, regulated and stuff means absolutely nothing. These are commercial entities, and all anyone has to do is go on to any of their websites. They've never said anything else. The vulture funds have done absolutely nothing wrong. They've never lied. Their purpose in life is to buy cheap, sell high, and exit. That's what it does and says in the tin. That's to do, and not to upset you, Deputy Doherty, but the behaviour of Cabot, I'm unfortunately sort of slightly immune to it now at this stage. No surprise. It is a daily occurrence between all the MAB staff, the length and breadth of the country. The inherent, we had a session recently where all of the organisations involved in dealing with debt in the state came together twice in the last 6 months. For the first time ever, we did so in private, and the evidence and the experience of all 60 people present was universal. Everybody there knows the truth, knows the facts, and indeed has a toll on people dealing with families, as everyone in this room has experienced dealing with families in difficulty. And some think there's a conspiracy theory about banks having a go at them, when in fact it's actually incompetence. But your point about the letter and the speed at which the letter arrived from Cabot proves these are people who are used to tackling and dealing with people to extract money and extract profit, and their efficiency will be frightening.
It should be said, Cabot are not a new organisation. They've been involved in the collection of debt for quite some time, and not just mortgage debt, hire purchase agreements and so on, so they're quite experienced.
And I'm never one to defend debt collecting agency, but in fairness to Cabot, they're acting under instructions from the entity which is Promontoria Scariff, which is only an entity that is only established for the purchase of these loan books. So that's, they've got instructions to issue fixed term receivers. Like, we have a case that I'm aware of where there's multiple properties that are in positive equity. There's no problem with selling those properties. From a Tory scarf don't want to know. They're saying, no, we're appointing the fixed asset receiver, which means legal fees and the receiver fees are going to eat into any positive equity they have. And this is the same entity, by the way, that wrote to a number of their customers, and I have this letter as well, which said, oh, by the way, we were subject to an email phishing attack a number of weeks ago. They wrote to them a month after it. Therefore, your name, contact information, financial details, including outstanding balances, have been disclosed. Like, it's, you know, and they write to them then,
Deputy,
the same people, and say, by the way, pay your arrears in 30 days or we're taking your home.
Okay. I mean, the buy-to-let situation is obviously slightly different in the sense that the borrower is a landlord. It's the knock-on effects in terms of potential homelessness. Yeah. A number of the housing organisations, Focus and so on, have specifically said that a lot of the rising problem of homelessness that they're seeing is the eviction of tenants who are tenants in buy-to-let properties. In the context of your bill, it's a little bit more difficult. Who would prevent the sale of the loan? Would the tenant have a right to object to the sale of the loan? It's not his or her loan, so it's a slightly different. Yeah. But an issue does arise there, obviously, if the loan is sold, what rights does the tenant have to have his or her lease honoured or his or her occupation of the property honoured? The landlord will perhaps exit stage left, perhaps with any residual balance written off, but the tenant is the one then with the immediate problem.
And in fairness, that I think that's a separate piece of legislation that we've also published, which is the Focus Ireland Amendment, which would deal with that. But I have 3 questions that I want to put, because I'm conscious that other members are coming in. I might get a chance to take them in later on. Can I ask in relation to some of the other, I'm going to put these together if that's okay, so some of the other solutions that's out there. I question the Central Bank and AIB, for example, in relation to sales, instead of selling to vultures at a discount, we now know of 52% across the €24 billion portfolio that's so far been sold, to sell to non-profit organisations. So be interested, Mr Hall, given that you're CEO of one of those, your views in relation to that and whether that's a real possibility. I'm very conscious of where this is going. There's a lot of worried people out there. I've been stopped on the street by people who work with the banks and some of the funds, and they're really annoyed that this bill is before the committee and has got the support of the Dáil so far. Everything's been thrown at it, and that's fair enough. This is a take your side moment. So there's 2 big issues here. One is that I see is the constitutionality argument that the government put forward, and the other one is the money message issue. We've got a preliminary view in relation to the money message that one is not required, so therefore the government wouldn't be able to block it. I've made my point at second stage that speech that actually I think, because I've seen, in my view, an abuse of the money message system, although we have a new procedure here in the last number of months, an abuse of money message to block pieces of legislation, and I'm not afraid to actually look at a legal challenge if one was warranted, if that was used as a tactic to block this message. The issue of the constitutionality of the bill, the FLAC has made a submission which I agree with in terms of that when we limit property rights, there is also an issue. There is always an issue of whether it affects or it is. It affects the right within the Constitution, but we know that right within the Constitution is subject to certain restrictions in terms of the public good and so on and so forth. Now, so there's always a question of constitutionality, and that's why I would have got legal counsel's opinion when we drafted this bill. The point from FLAC is that it is only the courts that can decide this, and I agree with that point. I'm somebody who took the government, the Attorney General, to court and won when the Attorney General told us that what they did in Donegal in terms of a referendum was, or denying us the right to have a by-election was wrong. So I understand that the Attorney General can be wrong on occasions. But it is, I just want to point this out to you because it's in your submission, that the Department of Finance said they had advice from the Attorney General that this bill was unconstitutional. Under further questioning from me, they actually wrote back on that And they said, no, the Attorney-General hasn't said that the bill is unconstitutional. The Attorney-General says there are issues that may lead to issues of constitutionality, which is obvious. Anything that restricts property rights, that question would need to be answered. In your view, is it not the case that we introduce legislation that affects contracts on a number of occasions? Employment law contracts, indeed, notwithstanding the argument had about the statutory nature of the Code of Conduct of Mortgage Arrears, does that not in a way restrict the contract that is there between a bank and a borrower in terms of their automatic right to repossess, which is in their contract? Even the changes to the Insolvency Act, which allows the courts to look at the issue of the veto, which we were told was not possible, would be non-constitutional. So, is it not the case that the issue of impacting and affecting existing contracts, it's not a case of you can't do that. It's a case that it has to be careful, limited and subject to proportionality, which I would argue that this is. The second question I have is in relation to the money message. I'm not sure if you have a view in relation to this here, but if you read the Department of Finance's submission, which is obviously their big ticket item, if they can convince the House of Oireachtas that this needs a money message, they'll kill the bill. So they're basically saying that if this goes through, they will need extra staff in the Department of Finance. If this goes through, the Department or the Central Bank will need extra staff. Like, this is just farcical in my view. The idea that banks, would be prohibited from selling to a vulture fund unless they receive their consent would require additional staff in the Department of Finance or the Central Bank. It's just bizarre. If you have any views in relation to this, because it's something that the committee hasn't dealt with, and I know that we will need a further view in relation to the money message from those in the House of the Oireachtas, which will give that. So, if you have any views on that, it would be welcome. Either way.
Well, just on I don't know about the second issue and the money message. I don't know that we would have sufficient expertise to address that. I think, though, it does raise an important point, which is perhaps one of the reasons for loan sales is to save money for the institutions that lent the money in the first place, properly dealing with these accounts and entering into legally binding arrangements like personal insolvency arrangements and so on. So properly dealing with the accounts in arrears for over 2 years in a systematic way would have probably monetary consequences for the institutions themselves. That might lead to a certain amount of supervision required, extra supervision required by the central bank and the department, but I can't see in principle that would be enormous. But on the first point, I mean, the constitutional issue, I think you're absolutely right. I'm looking at a recent decision of the High Court here under the personal insolvency legislation. As you know, there was no appeal originally. Yeah. So when the Personal Insolvency Act was first introduced in 2012 but came into operation in autumn 2013, literally creditors could decide at a meeting to accept or reject an arrangement. And we were told back then that the reason for that was that to have an appeal mechanism that might result in the imposition of a solution upon a creditor was unconstitutional. And we all predicted at the time that this would lead to very low numbers of arrangements, and indeed it did, until eventually it was decided the legislation needed amendment in late 2015. Beginning of 2016, then a limited appeal mechanism to the Circuit Court was introduced, only in relation to a personal insolvency arrangement, and only a personal insolvency arrangement that involved arrears on a principal dwelling house. Since then, there have been some very interesting decisions of the High Court on appeal from the Circuit Court. It has started to increase the numbers of personal insolvency arrangements, not quickly enough, unfortunately. It's running about 3,200, but there are personal insolvency practitioners becoming more expert and adventurous and creative around the legislation. And what we're beginning to see, this decision, for example, the Parkin case, it's 33 pages, where the High Court very carefully goes into the nuts and bolts of constitutionality of imposing a write-down on the lender in this particular case, and does exactly what you describe. Talks about proportionality, cites case law, including Heaney versus Ireland from quite a long time back. So, of course, there's a constitutional issue with your bill, I think, because it does affect the property rights of creditors notionally. The question is whether the public interest is sufficiently important here to override that property right. There is a property right, but in this particular case, for example, and you may be aware of it, it was a personal insolvency arrangement where there was a counter proposal from the lender, PTSB as it so happens, counter proposing that there should be a split mortgage put in place of 26 years duration. And that's what the appeal was about. And the High Court ruled in favour of the applicant, that the split mortgage would not return, there was no certainty the split mortgage would return the borrower to solvency, and therefore the arrangement as proposed went through. So again, it's an example of the court in a proportionate way looking at the legislation, and the High Court has very clearly drawn out the social objectives of the personal insolvency legislation on a number of occasions, and what did the Oireachtas mean by this? So, you know, it is a live issue. I would have thought that the appeal mechanism might have been challenged by a creditor at some point from a constitutional point of view, but I'm not aware of any challenge thus far, and we're 3 years later.
Par 5 was another good example of the limiting the rights of private property in relation to legislation that was passed in this House that actually impacted on the rights to private property, but again stood the test. You know,
FAC has drafted an amendment to the Land and Conveyancing Law Reform Act, which, if enacted, would give the courts greater power in dealing with people in long-term arrears, and we have had senior counsel advice that it is possible to construct an act that will stand constitutional challenge. So, I mean, it happens all the time, but equally the constitutionality of socially progressive legislation is almost the first reaction to it. So.
And the Law Reform Amendment Bill, the Land and Conveyancing Law Reform Amendment Bill that has recently been moved by the Department of Justice, interestingly, if you look at it, it purports at least, and it's early days, but to give circuit courts the right to decide to refuse to grant a possession order in specific circumstances. So again, there's a constitutionality issue there, but that is a Department of Justice bill.
Yeah.
I think the insolvency legislation has changed. There's a structural difficulty, a deficit with the insolvency system and service, where there are a number of personal insolvency practitioners who are exceptionally competent, and the numbers of the case that Paul has mentioned and many other cases are well thought out, well executed, and indeed provide good protection for customers in arrears. I think the constitutionality question Paul has answered. I would agree. I think if deputies and senators are engaging with customers and constituents on a daily basis or a weekly basis who are in mortgage difficulty, who are genuinely under immense pressure and stress, there comes a time where you have to make a call. Historically, we've chosen banks and credit institutions, and that balance is dramatically imbalanced against consumers, and there needs to be a rebalancing of that, and whatever is required to force others to take a challenge, let them take the damn challenge. If they want to. All main banks have challenged various aspects of the insolvency legislation and have tried to object to doing it. That is their way of doing it. Vulture funds have done the same. So the lovey, cuddly banking and vultures participating with the insolvency legislation isn't always the truth. In relation to one of the other comments, one of the questions you asked, Deputy, I know AIB were in with you and you asked a question around charity. We are engaging with them, and as Jim O'Keefe had mentioned and Colin Hunt, there is an element of confidentiality around it for a whole host of reasons. I would suffice it to say that having been doing this since 2010, all of us in this room have wanted and wished for an alternative to vulture funds, an alternative restructuring component. We've been told, as you've outlined, in respect of your own bill, and indeed in respect of many bills and many times before, certain things aren't possible. Over the last number of months, the engagement that we have had with AIB gives me the clear understanding this is absolutely possible. And I'd go as far as to expect to be making a bid in about 6 to 8 weeks' time. So as I say, and I hope I'm right in saying that what we all believe to have been an alternative to what's happening at the moment and the despicability of what's happening at the moment is possible. And I think it's hopefully we'll be back to discuss that with you, with or without AIB at a future date. Not easy. I'm giving a simple answer at the moment. This is nowhere is this easy to do. It's very adventurous and has required a significant leap of faith from AIB and their board, who have fully endorsed the programme. However, up to this morning, I am exceptionally positive.
Very good. Well, that's quite interesting. And look, I'm not shy in criticising the banks when they need to be called out, but I think it's worth acknowledging that AIB has led in a number of areas, including the arrangement that they entered into with IMHO a number of years now ago, and other banks followed. And obviously I think they were the first bank to come out and also talk about debt write-down for borrowers, which other banks should also be considering as part of the restructuring. So look, I hope that there is fruit in this here, whether it's your own organisation or another not-for-profit organisation, because the issue here, the core of this here, it's not about, you know, Promontory, Scariff or Glen Bay. The problem is that it's the motivation behind. The motivation is to make as much profit as quickly as possible and have no ties to the rest of the portfolio or the individuals or the areas where the loans were generated from. So a different structure is required. I'm one that acknowledges that there is NPLs in the banks. They need to be dealt with. But I think it was, you know, Flack that made the point, or I may be wrong, like that banks should be forced to do the heavy lifting. Banks should not be allowed this easy option of just selling on their loan book and saying it's nothing more to do with us.
There's an exceptionally, you know, again, the narrative, the misleading narrative that's given is that everybody who's a mortgage arrears is a strategic defaulter.
Yeah.
And that's just utterly disrespectful. Where in fact, the question, if there was competency within the consumer protection component of the central bank, the question that would be asked of the banks amidst their utter rubbish they record is how many customers, and part of our engagement on a project with AIB is how many customers have engaged, have actually proven to you that they cannot pay their mortgage and whom you've determined are unsustainable. Yet they've complied and done everything they can. And we saw with permanent TSB, the response to those people who complied and were given restructures and complied with those restructures, they were still sold to vulture funds. So forget about those messers and people who want to try and game the system. They'll be dealt with in due course, and there's many ways to deal with that. This is for the cohort of people who are too scared, who are sitting at home petrified, who've gone and sought advice where they can't fit within stuff. And I urge those people who are watching in today, who are in difficulty, there is ourselves, the Irish Mortgage Holders Organisation, there's FLAC, there's MABS, there's the Insolvency Services Back on Track, there's Phoenix Project. There are a number of competent, coherent people who speak together, who work together, who share information, who share ideas together, who will get them the best option for them. Sitting at home and sitting in your hands is no longer an option, but there are a cohort of people who've gone the extra mile and engaged. And many lending institutions now within the state are sitting there with those people in the full knowledge, not declaring the numbers, that they are unsustainable. And even if they kept them and didn't sell them, Deputy, which is far more concerning, is they still will lose their home.
Finally, can I ask just on this here, the letter to Marcella, which was to Pepper, can you talk about the significance of this letter? This is an offer of $236,000 to purchase. Was this made from iCare to purchase the home as a mortgage to rent? And Pepper rejected the offer. Can you talk about just the significance of the sum that was offered by iCare and the significance of the rejection of that offer?
And I preface this by saying there's multiple examples of this which you will see when visiting the office. Just to outline this very briefly. This valuation, which is an independent valuation confirmed by Pepper, who are acting on behalf of Shoreline and through the housing agency, puts the property value at €265,000. The repairs required to bring it to standard, where iCare as an approved housing body would be able to manage property and have people living in property as per the rules of being a landlord, is €6,413. The offer that was made by iCare to buy that property from Shoreline via Pepper was €258,587. It required a discount of 8% to make it work the way the social housing model works. 8%. The other example was given with Start Mortgages was 12%. These are the examples of the nonsense and the misleading information on the assumption that because a fund holds loans. Now, it is worthwhile saying, to be fair to Pepper, as opposed to Shoreline, most of mortgage rents done previous to iCare getting involved were done by Pepper. 50% of all mortgage rents were being done by Pepper. And again, Mars Capital would also be actively involved in mortgage rent and do other forms of restructuring. And this is back to the myriad of connections there are. But 8%, and in the other example with Start Mortgages, 12%. And in the correspondence that we shared with you at the start, you will see our own office, this is even more sickening, our own office's expectation is a rejection above 15%. And that's why when they rejected the 12%, the staff questioned and said, well, you normally reject everything above 15%. Why are you even rejecting this one below 15%? And these are the lovely vultures who've swooped in, have picked the carcasses of Irish families and families. And these are people who they will effectively throw out in the street. Yet the Minister for Finance, the Taoiseach and many other commentators will state, but vultures are wonderful to deal with. And they're nice and they bought the stuff cheap, sure, and they're logically going to be able to do a deal. That's factually incorrect. And this is what is on the coalface, first-hand evidence that's been given to this committee today and will be to the committee in the future.
Okay, thank you.
The witnesses and congratulate them on the wonderful work that they're doing on behalf of people who have got into very serious difficulties. Just two brief questions, Chairman. One is that when loans are sold, is everything sold? The loan, the property, everything goes, we'll say, from the bank to the vulture fund? Because I have come across a couple of cases where the loans are sold and the vulture fund wants to get vacant possession of the house or the apartment, and they go to the courts. In some cases, it could be the original bank that is taking the case for the vulture fund to get eviction, or the case of liquidation or eviction or whatever.
But I think you raise a very important point, which is it's commonly understood by some people that each loan is sold on a loan-by-loan basis. In fact, it's a portfolio of loans, a portfolio that's often quite large. The buyers of the loans don't look at those loans on a loan-by-loan basis. They buy it at a particular price with a particular lockdown. And in our experience, often the buyer of the loan doesn't have sufficient documentation, contractual or otherwise, often doesn't have correct information about the arrears and when they arose, and so on. But technically, I mean, this problem sometimes arises where loans are bought that are already the subject of legal proceedings or repossession proceedings in the courts, where the new owner has to seek to substitute itself as the plaintiff seeking to repossess the property. But otherwise, it should be the case that all rights transfer from the original lender to the buyer with the loan, but it's not always as smooth and as straightforward as that. And often indeed, where repossession proceedings are being brought by the buyer of the loan, the affidavit, the sworn statement that the lender has to set out to ground their application doesn't often contain enough information about the history of the mortgage and how the arrears arose and so on. I don't know whether that answers your question.
You're saying the affidavits could be shady enough that the whole truth mightn't be in the affidavit?
Well, there are circuit court rules that oblige the affidavit to be set out in a particular form, and they're quite detailed. But sometimes the affidavits don't have the level of detail that you would wish to see, and in that case, the defendant borrower may have the bones of a defence at least. But the point is that, you know, it could be 2,500 loans. It's not like the fund sits down and goes through each of them one by one. This is not done exhaustively. It's done as a job lot.
Yeah, because in some of those cases, it would seem that the person that owns the property was trying to deal with the bank. Then the bank has sold the loans.
Yeah.
And now that person finds that's the original bank here that's trying to evict them. And they're kind of...
there's a lot of proceedings before the courts that are being mixed up with repossession proceedings where they're fact, believe it or not. So one of Deputy Doherty's colleagues, Owen O'Brien, had a constituent who we were dealing with start mortgages on their behalf and proceedings issued against this lady. This is only a number of weeks ago, and unfortunately the lady passed away, the young lady, a couple of days before the court, and a big panic on our behalf. She was buried on a Thursday, was to try and get the case adjourned on the Monday with start mortgages before the court. And there was a big panic because everyone had interpreted, including Deputy O'Brien, that this was a repossession proceedings. In fact, what the proceedings were was to change the name to Start DAC. So they had taken proceedings against this lady in the Circuit Court. The Circuit Court said no, and they were appealing to the High Court, but it was listed as being Start. Now, Start were the originating of the loan. Same issue on the same day was Ulster Bank and Promotoria, and again Ulster Bank had initiated the legal proceedings. They bought the loan amongst a big mishmash of loans. Promotoria bought them, and they then have to go and substitute the proceedings for Promotoria's name, but the originating ones would still be in Ulster Bank's name. So again, void of any consumer clarification or consumer protection in relation to it, and very confusing for somebody who is genuinely trying to engage, as your person seems to be.
But it's within the law, is it?
Well, there's a Court of Appeal decision here as well that involved a company called Mars Capital who sought to have a so-called omnibus order made where they could be substituted as the plaintiff lender in a large number of cases. So, in other words, to take the place of the bank they bought the loans from. And the Court of Appeal refused and said that this had to be done on a case-by-case basis. Now, what it involves is a motion on notice to the other side to be substituted in this case, the repossession proceedings. But as David says, that it's sometimes very confusing for the borrower, and part of the problem here, which as an organisation that campaigns to improve civil legal aid services, people don't have access to legal aid by and large from the Legal Aid Board law centres to defend their position. So even in the case of if the affidavit doesn't contain adequate information, who are you going to go to as the borrower to represent you or to defend your interests?
I would actually love to. We've multiple cases now where loans are sold to a fund. Files don't automatically transfer. There's no obligation upon anybody to transfer anybody's file to the new loan owner. So we have multiple cases now where we're looking to get a copy of the data protection, a copy of the files which everyone used to get. And many of them are replying now to the funds saying we don't have the files. We bought the loans, so the history, the engagement history, the contact with the persons that are there.
So you're saying that's separate?
Yes, sir, they don't have to. They're not obliged to. They didn't buy the files. Bought the loans.
Well, it's a standard practice in money advice work to make a data access request, generally speaking, just so that you get the full files so you can understand the history of the loan and when the problem started and so on.
I thought all of this data was circulated between the banking institutions. Everybody's data.
Well, I mean, in a number of cases, and there's one particular credit servicing firm that is simply saying we don't have to provide you with specific copies. You should have already got this information from the original lender. There have been complaints made to the Office of the Data Protection Commissioner around that. But again, it's another illustration of, if you're dealing with the credit servicing firm, it doesn't... now, I have seen some correspondence where, to be fair, the firm has said, we don't have that information. We didn't get it when the loan was sold. Indeed, I've seen correspondence where a firm says, contrary to popular belief type of thing, or it's a common misconception that when a loan is bought, the full suite of information transfers from the originator to the buyer, that's a misconception. So, this is happening. There's a certain element of speed here in the sale of loans, and we're in a bit of a race against time. There's 3,000 plus personal insolvency arrangements in place, but right now, at the last count, there's about 27,500 accounts of principal dwelling houses in arrears for over 2 years. A third of those are already in the hands of unregulated loan owners and retail credit firms. So it's a finite problem, but they're already moving to bring legal proceedings or to continue ones that are already in existence.
And just imagine as a customer having engaged but had no money with your former lender, whatever bank it might be, and then your loan gets sold to a fund who now adopts an aggressive response to try and get it to move
through
along.
the courts.
To the courts.
Yeah.
And you're trying to say to the fund, to reassure the fund, in truth and honesty, I have engaged. I haven't had any money, and I have done as I was asked to do by the former owner. And they say, sir, we don't have your file. We're kicking on. That's the carry-on that's going on. So this rubbish, and it's utter rubbish, that is being... And it's very concerning to have senior officials and politicians state as a matter of fact that something that's factually incorrect. It's very worrying around vultures are good and adhere to best practice and do things, and sure, are they not regulated? And we've already discussed the regulation that is in place around the code of conduct. But data files not automatically transferred, people making data requests, people who've genuine, sincere people who've engaged with their former lender now find themselves at the receiving end of it, and they don't even have the data to protect themselves. What happens to recordings? Permanent TSB, all those loan sales, what happens to all those recordings of those files? Did they transfer? No, they didn't transfer. What happens to Ulster Bank and Promontoria? How many files? If I'm a vulture fund, my response is automatically going to be, go talk to Ulster Bank, I don't have your file. So
I'm looking at a letter here, Senator, where it says, we're writing to let you know some important information about your loan. Promontoria has agreed to transfer its interest in your loan. Now, it bought the loan from Ulster Bank and is now transferring it on to a third party. So you're getting, not just the sale of the loan to one party, but then it's been passed on to another entity to deal with. And borrowers are simply been informed that this is happening. No consent sought, no notice provided.
And any recourse, have they any?
The same recourse as they had against the original lender.
And the biggest concern of all has been the sale by vultures to super vultures. And it's always been the concern where banks are selling to vulture funds who are themselves at varying levels of despicability. The unknown quantity here is, and if you speak to any vulture funds honestly, it's an awful pity they don't have the wherewithal to come in before the committee, because they would tell you honestly, why, like one said to me, why would I repossess a house in County Clare where they're in arrears and haven't paid their mortgage and it's increasing at a value of 8% per year? Well, why would I repossess that house? Why won't I wait and sell that on now that I've exceeded my entire target on this portfolio 3 years ago? Why would I sell that house? Because people are saying, well, they aren't issuing as many repossession proceedings. We don't have proper repossession proceeding data from the Central Bank, and we'd be well advised to speak to the Central Bank and ask them for effective repossession data as to how many proceedings are before the courts, because Paul and I have discussed this before, and as Paul has mentioned before, they're recording adjournments as separate repossession proceedings. We don't actually know what they have. So, there is a major challenge, and a big concern is that the vulture funds have now profited themselves. There's nowhere else in the world, I don't believe, that the vulture funds have recovered as much money on their investment as Ireland. And the most concerning part of all, and the part that they smile most about, is many will not have had to repossess many properties. They'll get a chance to sell them on to super vultures and have made the same money they intended to make without having to go to the dirty work of repossessing a family home.
Is there any link up, we'll say, between vulture funds and banks at board level, or people that make the decision for the banks to say, well, you have got to sell on your NPDs?
It's a very small pool of people and a very small pool of funds, and again, it is like a secret society, because you find these announcements are made. They're not like a public tender. There's no public transparency or public process on it. In the commercial world, that's perfectly acceptable. But these are families. These are people's lives. This is their futures that are being sold, and there is no impediment upon them doing so.
I don't think the strategy is decided within the confines of this country. Now, there is a requirement that there be the owner of the loans has a presence here, but often there are companies set up specifically, as Deputy Doherty mentioned earlier on, or perhaps it was Deputy McGrath, the same directors who are directors of 360 companies and so on. So there's an official front, and that company often instructs the credit servicing firm. But in terms of who decides what happens to the overall portfolio and where it goes, and what action is taken, our view is that those decisions are made far from this city and this country.
Just finally, Chairman, a number of years ago there was an insurance for people took out insurance for their mortgage in relation to if they lost their job or whatever. Did you come across any cases where the insurance didn't pay, where the person might have lost their job, they might have lost their house, or they weren't able to pay their mortgage because of losing their job, and they had the insurance and the insurance didn't pay up? Did you come across any cases of it?
Yeah, I mean, there have been cases where I suppose what you'd call inappropriate selling has been mortgage protection policies, redundancy protection policies, critical illness cover and so on. They have been available to people drawing down mortgages and other types of loans over the last number of decades. But I think certainly this arose in the context of the Financial Services Ombudsman Service. There are a number of people who were sold loans that didn't actually cover them. So, for example, you'd be sold a product that would only be technically available to someone working under a contract of employment, so directly for an employer, but then you'd find that the person was designated as self-employed, so when they went to claim, the cover wasn't there, and so on and so forth. A bit like the tracker scandal, both in Ireland but particularly in the UK. There was a programme of restitution to people who thought they were covered by policies, who paid premiums, only to find that the policy didn't cover them.
Most people in such difficulty, Senator, that's one or two banks, to be fair, did adopt a good policy whereby when the payment was made against the mortgage, irrespective of being a full payment, the first part of that payment that was taken out was the insurance premium for life cover. But many people don't pay it, and it's one of the ones that gets sacrificed, unfortunately, by many. And part of it is the consumers' behaviour themselves, because of just fear and pressure that they're under.
Well, sometimes, obviously, the payments are such on top of the mortgage, and often, unfortunately, house insurance goes by the board as well, which is obviously particularly dangerous. So both insurances of all kinds stop being paid, and that can have very damaging consequences, obviously. But that's a product of pure financial difficulty in many cases.
Thanks, Chairman. I want to just ask a number of questions. I don't intend to delay the meeting, because we've had a good exchange, and I think that both parties have put forward, a fairly detailed narrative, which would concern anyone and should concern the members of this House. Deputy McGrath's bill, Deputy Doherty's bill today, indeed the bill where Ed Honohan assisted in the writing of the bill, have all been torn to shreds by the vested interest in this state, including the political establishment. And I find that extremely concerning. And we don't seem to be able to reach a point where the issues that face the people that we represent that are in these difficulties in mortgages, we don't seem to be able to find a point where we can safely say we've reached to offer the real protection that they need in terms of their lives, or indeed in terms of the human rights in that quotation, Ms. Barry, that you gave earlier on. So my question is, in all of the exchanges that we've had here with banks, I think there was one fund before us. The other funds have just refused to cooperate in any way with the banks. This is to both parties here now. What can we do next to bring to the Oireachtas the true story of what's happening with the vulture funds, the courts, as you responded to Senator Burke, and the steps that are needed to be taken, not in the future, but now, the urgent steps that are absolutely required. At the last meeting of this committee, I asked that we would maybe look at the possibility of bringing all parties together and those that have been affected in order to get a clearer picture and to have it properly exposed for everyone that's interested in this area or that is affected by what's going on. And in the context of Deputy Doherty's bill, I think that it might be helpful if that piece of work was actually brought forward. So we take up your invitation, Mr. Hall, to visit the offices and to see that. It's a step forward. But I'd like to hear from both of you as to what you think we should do next. And I'm suggesting that maybe a day of collective people that are associated with this issue to come before the committee with clear specifics as to how they're affected, and then others to come and tell us how best to address the issue. Because you mentioned the Insolvency Act, which I was interested in on your side, Mr. Joyce, in relation to, or the opening statement rather, in relation to the piece of the contract that says, we could sell it on regardless. That maybe we could encourage someone to challenge that whole thing, and that would deal with the retrospective nature or argument that they have about Deputy Doherty's bill. So what do you think that we can do next to make something happen? To make the powers within this House here and within the government to take note that they're spinning a yarn or a downright lie when they say, and the protections travel with the loan. What can we do to undermine that argument and cut through the fog and give people some sort of hope that we're doing something, and also to actually try and do something as a committee with the government?
Just in reverse order, Chairman, I would say there was a consultative forum involved with the Insolvency Service, which involved creditors and debtor advocates, myself and indeed personal insolvency practitioners and the Insolvency Service of Ireland itself. It sent in some time ago, I think it could be 8, 9, 10, 12 months ago, changes that were agreed by all parties to the legislation. These are agreed by creditors and by debtors. And I think in parallel to anything that this committee or yourself, Chairman, undertakes, there needs to be an acceleration of those changes made, because undoubtedly the hand-to-hand combat that's going to be required in relation to dealing with vulture funds will take 3 strands. And indeed the remainder of banks will, because banks have given up. It's very important to remember, banks have just given up in relation to engaging people in mortgage arrears long term. There are some banks who will still continue to do it, but many people will have not had answers back from banks over a period of time. They're lining up now, and there will be an avalanche of loan sales. And the prediction will be that during the summer, when people are on holidays, they'll do as they've done historically, make those announcements. I think the Insolvency Service and the personal insolvency practitioners, the Awalia scheme, all as an entity needs to be reviewed and combined. And I think there will be some good news stories from that. There will also be some challenging stories from that, because all is not well within that structure. The insolvency service was privatised. There wasn't a public insolvency practice. Why MABS was never converted to a large personal insolvency practitioner's practice is beyond me. To do the Irish Mortgage Holders Organisation, our board is now considering changing our entire tack in relation to informal arrangements to look at doing them through insolvency arrangements. And in parallel to anything that happens, that will take time. And as Paul has mentioned, there's only 3,200 insolvency arrangements have been done. There's 27,000 people in mortgage arrears. At the current rate, for all those eligible for one, could take 100 years to resolve. So the legislation needs to be adopted, the changes that were agreed.
Fine, but I'm asking about Deputy Doherty's bill and this committee and the work that we've done up to now on this, which has been fought against every step of the way. So is there a day that we can have to bring in the interested parties to explore, not just explore it, but to put forward the views that maybe have already been put forward? Or that discussion, I'll go back again, Mr. Joyce, with Senator Burke, which tells its own story in that exchange. And I know what happens. I mean, people say, well, why did you take it to court, or why didn't you go back to the original borrower and take them to court for the information that you need? You're dealing with broken people. Absolutely. You're dealing with people that they're trying to live every day.
I think the advantage you have is, as with our own gathering of those that are involved, it's a very, very small community of people who are actively involved in helping those in mortgage arrears. Leaving aside commentators, in relation to actually providing service and providing help and guidance and advice and training between the collective. Having a day with those people, I'd also respectfully suggest Boxer Moran's bill and all of the other pieces of legislation, having a day where everybody comes together. I'd love to see what would the Oireachtas agree from all of the pieces of legislation that are there. This is an isolated cohort of people. This is not a current banking challenge. It's rubbish from the central bank to infer that mortgage rates will increase in relation to certain things that will happen. This is a finite group of people who've been left behind, who've been abandoned, and conflicting them with current setting people, customers against each other and members of the public against each other to try and isolate and alienate these people is disgraceful. So having all of the parties, I think, Chairman, on a day, including those affected, in whatever format, some are stronger than others. I know you had the tracker people were exceptionally strong in being able to speak. Not everyone is able to speak. Many are broken, and many have got great challenges and difficulties in their personal circumstances. But the evidence is clear if people want to see the evidence.
But I'm anxious to expose that evidence to whoever is interested in this place here or in government. I'm going to extend an invitation to the Minister to be here to hear it at first hand. I want to expose the lie that I see as a lie, that vultures are happy, clappy people and you could engage with them. That is not the case. No. And you said that you met, 60 of you met?
So we organised a gathering, Paul and I, with support, and it was a fantastic gathering of MABS staff from all over the country, travelled from all over the country, the insolvency service, the head of the insolvency service, the mainly active PIPs in the country, a dozen or so of the active personal insolvency practitioners, to have a conversation ourselves. What do you do with the hard cases? And I think some of the contributors to that would be useful on a day as well, and we'll furnish the information to you for that. But we had our own conversation. It was done in private. We weren't looking to grandstand in relation to it, simply because we all had a shared issue and shared challenge, listening to this rubbish in the background.
But appearing here is not, I don't consider that to be grandstanding by anybody.
No. For us privately, we met in relation to just to sort of assure ourselves we all weren't mad, to assure ourselves we were all seeing and witnessing the same thing, and we were all faced with the same challenges. Just on the off chance we were wrong.
I think the community would love to hear from.
We do plan further days of that nature, and it might be interesting for the committee members to come along and attend and listen to the deliberations. I mean, the Deputy Doherty's bill will only deal with one aspect of this problem, and I think he knows that. It's what it does. What it purports to do is to at least seek the borrower's consent for their loan to be sold, which of course might not be withheld. Individual borrowers might say, yeah, I don't mind because the vulture fund may deal with me or my financial circumstances may be such that it might be in my interest. But if there was never any sale of loans to vulture funds, if vulture funds didn't exist, we still have a fundamental problem of loans that are in arrears, have been in arrears for a long period of time. The 2-year plus category now is 27,500. We wrote, and David will know this, to the Insolvency Service of Ireland and the Department of Justice a few years ago saying, can we look at the profile? And David mentioned the Central Bank is currently carrying out a review and seeking information from the likes of ourselves as to how we need more information in our figures. We need an awful lot more detail about the 2-year plus category of arrears. They're the dangerous cases.
But my question is, would that group, including some of those that are affected, do you believe as part of that group that an open session here in public to discuss the very issues that we've been talking about earlier on would be helpful? Because as you collect data and as you provide for legislation or amending legislation, whatever it might be, more and more loans are gone. They're so gone.
Exactly.
And there's a speed in this that is frightening.
That 27,500 accounts, we suggested that each and every one, now we don't know how many households that is, by the way, it's because a lot of people got top-ups. And what's needed here is a history lesson, first of all, for some of the institutions that have opposed this bill. You know, between 2000 and 2008, and we remember it well because we were there were no controls, literally no controls over the amount that you could borrow to fund the purchase of a dwelling, and people were sold multiple. And
my question to you is: are you willing to give that history lesson along with the current set of circumstances?
Well, everybody
that face people who are in this type of distress.
Absolutely, everybody in that category should be modelled for a personal insolvency arrangement first of all, because the personal insolvency arrangement is the backstop in the system, in the courts, and so on.
Because the other thing, and I'm sorry for rushing this, but the other, I don't, as I said, it's towards the end of the day here, but this is so important. In your opening statement, Mr. Hall, you've made fairly serious comments about the incompetence from banks. We're amidst a bureaucratic corruption and so on. And I actually agree with that. I agree with the sentiments that you've expressed here. But I think that we need to flesh it out in a way that is bold and in the face of the banks, because, quite frankly, some of the lies being spun need to be challenged.
And it's utterly disrespectful to all those people around the country who are helping, and that includes politicians, that includes advisors and organisations, MABs and everyone else, to hear this. And that's why one of the gatherings was to confirm we all weren't mad. And that this was actually something we believed. But I think a day or whatever format with all those parties and indeed people who are directly affected from this, and do you know the other category that's going to be most interesting to this committee will be those people who've been sold, and the Glen Bay category to my mind will be the most fascinating based on their immediate behaviour in recent weeks towards borrowers. So I think having people directly affected and all those contributors, and I do believe a collective of the bills, I'm fascinated to understand what is the benchmark within the Oireachtas that is required to protect citizens over banks.
Well, with Deputy Doherty's approval of the committee, and I'm only suggesting this, but I believe it would be helpful not just to the bill but to the general issue that we're trying to raise. And if we were to give that challenge to your organisation or to yours and others to come back with a format that would do exactly what we want to do relative to the work that you do, the legislation that we have to put together, and to challenge the Oireachtas by saying what do we have to do to get a piece of legislation passed that will work for those that are most in distress.
Yeah, Chair, anything that's helpful to scrutinise this bill further. Obviously, my views are well known. I want to ensure that this gets through as speedily as possible, but having the proper views, and we've enlisted the views of many others who've given us written submissions. So I'm very eager to do that if it could be arranged as soon as possible after, and that would be that we draw a line.
With the willingness of your group and maybe some that are affected, as I said, by this, and the type of information that you exchange with Senator Burke, I think it would be worthwhile. And I would invite you to maybe engage with the clerk to see how that can be constructed in the best possible way, with the outcome being focused on either regulation or legislation that could be dealt with immediately or quickly if the government was of a mind to do it. And if you were willing to do that...
You have in mind a more freer, looser engagement here as opposed to a structural question back, so more...
Yes.
As
and that we would facilitate that happening.
And we would be observing more than...
But it would also be, I think, a day of when people would get information. There's lots of people out there that suggest that there are different things going on within the courts and within the banks and within the vultures. And what you just confirmed for us today about a number of the points that we have discussed will show people that what they believe is true or false. And I would like to do a bit more of that as early as possible after Easter, and we could prioritise it. And the committee have already agreed to do something like this. So maybe if you could come back with your proposals, deal directly with the clerk, and we'll try and structure it in a way that gets the best possible information and support for that bill, or any other bill or action. Can I leave it with you?
Yeah.
Okay, then we can, if it's okay, we'll conclude the meeting if you have anything else to say. Okay? And thank you very much for coming along. It's been very worthwhile and informative. So the meeting now stands adjourned. Okay? Thank you.